control, it's another 12% of energy of oil that goes through the Bab el Mandeb Strait. So when they're targeting Saudi Arabia, it's a concern because we don't get that supply. So it's a little bit of a quandary as to why oil hasn't moved up so aggressively, because we feel with that out of the equation and the Strait of Hormuz out of the equation, in terms of giving supply, that we could see oil push on through that 90 area upwards and on to 100. So very interesting to see why it hasn't. But I do think as soon as the first missile or something occurs that follows through on the Bab el Mandeb Strait, then it's a different picture for energy.
Okay, Jonathan, and therefore, what is the different picture likely to be? If I were to put a gun to your head and ask you that, I want you to predict, okay, not literally, considering the current geopolitical situation, that's a bad thing to say. But if I had to push you to try and second guess what the likely crude price range would be from now until, let's say, October, what is your sense?
Well, what I would think, and expect a lot of volatility, and think that what Iran is doing, being in control, still negotiating, I think play would still be the same down with the Houthi rebels. So I would think that fact that it won't be resolved will see prices back up to around about 100, 110 US dollars a barrel for Brent.
So 100, 110 dollars per barrel is what you're looking at. In consonance to this, Jonathan, good morning, Hiral here. How are you looking at the precious metal side of it? Because you have gold and silver also, which is corrected quite a bit from your recent highs during the West Asia crisis. Now, one, are you expecting both of the prices to consolidate in terms of the silver and gold? And if so, when do you see that uptick coming back yet again?
Yeah. Look, I think it's a very interesting play for both of those, although I do prefer silver over gold. I think the consolidation we've had since the record highs, and that's all it is consolidation. I do see that both precious metals will start to move higher soon. It is all dependent on where we see oil, where we see inflation panning out, and where obviously we see not just the inflation, where we see the Fed work on interest rates and global interest rates as to whether they go up or whether they go down. And that's going to be a reflection on where we see oil. But as it stands, I'm super bullish on silver, and I love gold at these levels as a form to buy, because I feel it'll all come together to see both those two metals a lot higher in the future.
Okay, interesting. So the current consolidation in terms of silver and gold, good opportunity to buy, and you do prefer a silver versus a gold. Thank you, Jonathan, so much for joining in. Always a pleasure to speak to you as well. So that's an interesting take when it comes to commodities. But if you have to look at Indian markets, yesterday's session we did open with a mild gap down. However, that mild recovery during the session was very interesting because the buying interest remained insufficient to sustain at higher levels as well. Now, the investor sentiment overall has stayed pretty much cautious amid the continued geopolitical tensions, the elevated crude oil prices, and weak results from HDFC Bank is something which actually weighed on the benchmark indices. I mean, towards the end of the day, we had 145 points kind of pressure coming in from an HDFC Bank versus 4 or 5, of the components or constituents which were trying to negate that. At close, you ended with gains of nearly 0.4% to settle 24,238, while on the sectoral front, you had the PSU Bank, Pharma and Healthcare. These were the ones which actually emerged as the top performing sectors. Private banks, real estate remained the key laggards. In terms of broader markets, you actually outperformed the benchmark indices, and you saw continued participation beyond the large cap stocks in yesterday's session. Your mid cap 100 gained nearly 0.6%, whilst the small cap 100 advanced nearly 0.1%. You did witness a lot of selecting buying across the broader market segments as well in trade yesterday. So I think the second part of the trading session was much more interesting, Neeraj, because people didn't really want to give in. However, at lower levels, you were seeing some bit of buying that was emerging.
Yeah, and which may hold true per se, because the individual data back home is looking solid by virtue of earnings, this FC, NRB, etc. But per se, from the trade setup perspective, I think the template is that oil prices steady at higher levels, which isn't very constructive for significant upside. So you've got to bear that in mind. The good part is that people are turning constructive on bottom-up data that is coming in India. And I think banks today, for example, might be strong on the back of this FCNRB data. So could be interesting. And look at what cement numbers are doing. They're starting to look constructive. And there is optimism on the street with regards to cement. Sure, JK Cement was an outlier, but Ultratech, and we'll talk about it in detail today. Sure, Parag Thakkar will weigh on it quite a bit, but Ultratech, Nuvoco Vistas, the management that we spoke to yesterday, I think there is a clutch of these conversations which are, or the numbers which are looking constructive. Won't be surprised if cement turns out to be a bit of a dark horse, even in the monsoon quarter in terms of preference. So I think there are pockets which people will want to keep an eye out for, and certainly banks today will be at the forefront of it all.
Particularly because those two private sector banks got beaten the way that they did, right?
Yeah.
HDFC Bank 5% down. When was the last time you heard that?
True.
And Axis Bank as well.
Yeah, and from what even Neeraj is pointing out in terms of cement, it is going to be interesting because the moment you had Ultratech numbers that did come in, you did see a spike in the entire pack. ACC, Ambuja, all of them did really well. So that's telling you that there is good demand, and they've been very resilient in terms of maintaining the EBITDA as well in spite of the cost pressures. So that's the interesting point to point out. But overall, if you have to look at the index, we've traded within Friday's range and defended the 100-day EMA for the second consecutive session. And despite the weakness that we've been talking about in terms of private banks and global Qs, the broader trend has remained positive as Nifty has continued to trade above its key moving averages. Now look at the support, 24,135 and then 24,100, and the crucial floor is 24,000. In terms of resistance, 24,350 and 24,400 is what you should be watching out for. And if we break out above the resistance levels, then 24,500 to 24,600 should be the next target you should be watching out for. In terms of Bank Nifty, lower levels are seeing some strong buying support, and that has aided the index to recover close to, almost 500 points in yesterday's session as well. The first support is coming in at 57,640, so watch out for that one pretty closely. And on the upside, there is resistance at 58,085, but if you're able to go past that 58,085 levels, then 58,220 is something that you should be eyeing. So the data is seeming to be very interesting, but where the buying is going to come in is the key question. And I think on the derivative side as well, it's important to take stock of that. Puneet is standing by to tell us more in terms of what the derivative and FNOQs are indicating this morning. Good morning, Puneet.
Good morning, Hira. And as you rightly mentioned, right, because we saw the clutch of banking names continuing to be under pressure yesterday, and hence maybe, as you mentioned, the FCNRB deposit update could be the next big catalyst trigger. Today, of course, we have the expiry for the Nifty 50, so you have to watch out for all those moves. But 24,200 is where we are at this point of time. You have seen, in terms of the Bank Nifty yesterday, just a tad below that 58,000 mark, and hence not too far away from that near-term support of 58,200, 58,800 as well. So the moves on this index continue to be in focus. You've also seen that in the cash markets yesterday, again a sell number come through for the foreign investors. So almost in the last 6 days, 11,000 crores worth of selling seen in this particular by foreign investors in the markets. And that is clearly visible on the derivative side too. So you've seen pressure on the index long side at 11%. So 89% positions yet being short in the markets, but also the put call ratio that hasn't budged much from the yesterday's at at the 1.37 mark. So continuing to be there at this point of time. And that is also visible in the open interest distribution as we see across the key levels. So 24,000, 24,100 and 200 continuing to see red candlesticks as we see, and there hasn't been buying at the upper end, even at that 500-point gap that we've seen. So every time index has come close to that 24,000 mark, we've seen 24,500, 800 being activated. We have seen some buying, but not with rigor yet across those levels. So could see some consolidation in the near term. For stock-specific action, there's not too much that happened yesterday in terms of the F&O market. We saw some on Radico Khaitan, GVTND. And for the loser specifically, you saw some moves coming through on Indus Towers, PNB on the back of good results or covering of shorts. And Bandhan Bank was one where longs were being unwinded before the results come through as well. So it's a story of the benchmarks largely continuing yet again, and that could be something to watch today as well.
Got it. All right. Thanks so much, Puneet, for that. Let's jump straight into the stocks that you should watch out for. And there are quite a few of them. We've already highlighted the overarching pieces of information that could affect blocks of stocks, but let's get into individual names. And Paytm stands out. It is registered a beat versus estimates, and so for that itself is something that you should keep on your radar. It's recorded its highest ever quarterly EBITDA. You've had the merchandise value, or GMV, growth that has accelerated. That growth rose to 31% in the first quarter compared with 27% in the year ago quarter. The contribution margin has dropped, but it has stayed at their guided range of mid-50s. So take a look at this, right? Their revenue uptick of 28% year on year, 8% sequentially, pretty robust. 182% improvement in EBITDA on a year on year basis, 50+% on a sequential basis, very robust number. And the margins have improved on a sequential basis as well, from 6% standing at 8%. The contribution margin that I was speaking about stands at 54.7%, and the PAT number is up as much as 79% on a year-on-year basis, coming at 220 crore rupees. Now, one aspect is that they have called off their bonus issue, and essentially there was a justification that the board said they've evaluated the proposal. The board has said this, and this is from the perspective of long-term shareholder value and due deliberation, but they've said that they're of the view that the company should continue to focus on further compounding growth and profitability for shareholder value creation. So if at all that is a negative, it's a small negative, really, based on the kind of numbers that the company has posted. Citi has weighed in on Paytm. It's maintained a buy with a target price hike to 1,560 from 1,425. It says that the EBITDA momentum is driven by financial services and lower cloud costs. The payment GMV growth has accelerated. In fact, has accelerated. I pointed that out, over 30%. Paytm is seeing growth acceleration led by both merchant and consumer franchises, and it's delivering strong operating leverage as well. They see an upside to the earnings quantum and quality if the UPI MDR is introduced. Remember that there is absolutely no word of this taking place. This is conjecture at this point, but it obviously would be positive if a merchant discount rate would be applied to UPI. Right now it's free, of course. Action Construction is the second stock on my list, and it's registered strong growth across the board. There is margin improvement as well that has aided the bottom line growth. The PAT margin has grown 33 basis points on a year-on-year basis, and quite significantly as much as 338 basis points on a quarter-on-quarter basis. And this is not related to raw material costs. So if I had to hazard a guess without speaking to the management, I think that they might have benefited from a mix improvement during the quarter gone by. Net profit is up as much as 22%, revenue uptick of 20%, pretty healthy in the current context. EBITDA is up by as much as 27% as well, and margins have expanded. EBITDA margin coming in at 15% compared with 14.2%. Now, Bluestone Jewelry is the third stock on my list, and it depends. If you look at it on a sequential basis, and the PAT is actually contracted, but on a year-on-year basis, it continues to be a fabulous performance. The revenue growth has continued in the first quarter. EBITDA margin has declined on a quarter-on-quarter basis, but it's grown on a year-on-year basis. They've had a higher rental and advertising and marketing cost during the quarter, at least when you compare it sequentially. And as a result of which, I think it would have had a bearing on the bottom line. A&M costs, that is advertising and marketing costs, have risen as much as 21% on a sequential basis and 49.5% on a year-on-year basis. And rental expenses are up as much as 13% sequentially, 35% year-on-year. But bear in mind that this is a company that is very rapidly increasing its showroom and square footage, and that therefore that rental cost going up is par for the course. They've seen a pretty substantial SSSG growth, which is same store sales growth, and at a time when they've been adding showrooms. This is quite robust and quite a lot of repeat customers coming through to them as well. 39% same-store sales growth is very robust, and net profit coming in at 7 crore rupees versus a loss of 34.5 crore rupees is what I was talking about, and margins coming in at 14.6% compared with 11.3% on a year-on-year basis.
Interesting names. Let's see, what happens in terms of when markets open on these names as well. But on my watch list, we were talking about the cement pack, and we have Ultratech Cement. Now, brokerages have turned bullish, and that's the reason I'm picking that up. 5,000 crores is the fundraise that they've announced as well. Jefferies has maintained a buy. They've actually hiked the target price to 14,065, and they're saying that the company is staying ahead of the pack. Goldman Sachs has maintained a buy. They've hiked the target price to 13,500 from 13,160. What they say is that the results are strong and the incumbent is growing into like a challenger. Morgan Stanley, again, an overweight. They've hiked the target price to 14,700 from 14,600. They're indicating that the sharp volume market share gains have been achieved without actually compromising on the realizations. CLSA has also maintained a high conviction outperform, and they've hiked the target price to 14,000, and they're saying that the growth pipeline is seeming very strong. In fact, let's hear what lies ahead also for the company as CFO Atul Daga shares the management's growth plans.
The one big theme for us quarter after quarter is demand. If the demand is good, everything falls in line. And I'm delighted to report that the first quarter of fiscal 27 has reaffirmed that conviction emphatically. With a double-digit volume growth and a demand pipeline across infrastructure, housing, and urban real estate is as rich as it can be. Core sector growth slowing down in the month of May, lower coal and refinery output, and aggregate state capex in April-May growing a modest 2% year-on-year.
Okay, so that's a strong outlook coming in as well in terms of the rest of the year and the second quarter of FY27. The second one on my list is central mine planning. Now, an interesting set of numbers, a strong quarter wherein the net profit growth has actually outpaced the revenue gains significantly this time around. Your lower fixed cost proportions have boosted the bottom line returns. It's the exploration segment which has remained the dominant division, which has risen almost 18% on a year-on-year basis. And your planning and design segment achieved a significant turnaround and returned to high profitability as well. So 53% profit growth, 17% revenue growth. In terms of the EBITDA, a 62% kind of year-on-year growth is what they've achieved, and the EBITDA margins have come in at 34.9% versus a 25.4%. So a thumbs up on this one. Soba as well. Now, in terms of the first quarter highlights, the company has achieved the highest ever quarterly sales during the first quarter, and this has been driven by new project launches in Bangalore and Gurgaon. They launched almost 6.89 million square feet saleable area in 3 projects during the quarter, and the real estate sales value stood at 3,656 odd crores, which is up nearly 76% on a year-on-year basis. The average realizations have come in at 15,655 per square feet versus a 14,395. So growth in terms of your average realizations also is what you've seen. 48% revenue growth. PAT was at 51 crores, growing at almost 274%. Collections, again, 8% growth is what you've seen. So I think that is something that you should be watching out for. And they've said that the inventory with a sale value of almost 19,224 odd crores is what they're looking at what they've looked at in the first quarter. And the upcoming launches have a sale potential of close to 30,000 odd crores and 361 acres of land development potential. So strong, drivers that you're looking at in terms of Soba, and the numbers are also looking pretty good, Neeraj.
Yeah, yep. I think we've seen mixed stuff from this sector thus far, but I think the devil might be in the details. So it'll be interesting to see how the actual numbers come out.
Even Oberoi looked okay, na?
Yeah, Rustomji looked very bad. Yeah. So therefore, I think it's, let's wait and watch. What looked very good is Radish.
Yeah.
Yeah, it did.
So no complaints for Rallis perspective. So pull up the numbers firstly for Rallis India, and I think profit up. I mean, revenues number were okay, but margins at 18.1 versus 15.7%. Net profit up 31.6% at 125 crores versus 95 crores. I don't think you could find a foot wrong. The numbers were above estimates. Volume growth in crop protection business boosted the profit for Rallis, and the fixed cost optimization improved the operating leverage, as a result of which the margins have come out the way they have. So, very good set of numbers. You could almost argue that from a results perspective and a reaction on results perspective, this could well turn out to be the stock of the day. So keep an eye out for Rallis India today. That will be one key thing to watch out for. You will hear out the management, Gyanendra Shukla, the MD and CEO of Rallis India, at 9:45 a.m. on your show, India Market Open. So you might want to stay tuned all the way, of course, till 10:30, but certainly till 9:45 because it promises to be a very a stock that will be very active, and you might want to hear what the management has to say about what they will do post the Q1 fireworks that they have posted. You might also want to stay till 10 because what we will do is cover SBI funds, right? And Equirius has come out with a note. They initiate a long with the target price of 675 on it. They say it's powered by reach and built to compound. The distribution moat is powered by the parent bank, and yes, certainly you can't argue against that when it comes to SBI. They believe, Equirius believes, there are multiple optionalities beyond the mutual fund segment as well, and they see equity and passive assets to drive a 16% mutual fund AQAAUM, which is average quarterly assets under management compounded annual growth rate. It's a tongue twister, but that's what it means effectively. And they expect revenue and EBITDA CAGR, which is the more simple norm now. Because remember, CAGR, we've spoken it so many number of times, you'll hear it everywhere. It's compounded annual growth rate. They expect revenue EBITDA CAGR of 14 to 15% over FY26 to 29. You know, a stock compounding at 15% compounded annual growth rate for a number of years actually turns out to be a winner, even if you were to buy it slightly more expensive, remember that. But the keyword is slightly more expensive. I'm not saying SBI funds is, I'm just saying generally in stocks. Last but not, okay, that's the alert, right?
Average quarterly assets under management. You know, so obviously you know this, Neeraj, but just for the benefit of the viewers who will be wondering why you're not looking at AUM, the closing AUM at the end of a quarter might distort the picture, right? Because in any one quarter, suppose at the end of the quarter, you'll have a lot of institutions that sell fixed deposits, or not fixed deposit, but fixed income. So you will see a huge outflow from fixed income funds that distorts the overall picture. And so therefore you take the average over the course of the quarter to say how much is your AUM actually growing on a periodic basis.
And now you know why I like Moneywise so much. Okay, last but not the least, Sona BLW. Watch out for this one. The stock has been on a bit of a tear, really. If not a tear, at least a bit of an uptick. Now, UBS has come out with a note. They've initiated a buy with a target price of 830. The current price is 715, of course. They say the sum is greater than the parts. Strong legacy business, according to them, with multiple growth engines and having an established track record of scaling adjacent businesses. They are an early mover, according to them, in a potentially transformative industry, and UBS forecasts and consolidated revenue and earnings CAGR of 20 and 25% for the next 5 years, effectively 25% compounded annual growth rate for the next 5 years. That's just stunning for any business, by the way. They say it will be supported by an increasingly diversified business mix. Guys, there is also a talk of some corporate action around the corner for Sona BLW. So, multiple reasons. We will talk to Kush Bora and a technical expert about this, because I think the stock has done really well. Look at the last 5-7 days. I think the stock has had a bit of an uptick. Maybe there could be more in store on the back of the UBS note.
UBS note, yeah.
Certainly. All right. So there's lots to discuss. We will get you the trading strategy of the day. We'll be joined on the other side of the break by Parag Thakkar, Kush Bora, and a lot more guests to take you through Market Open and beyond. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
A stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26th July. Only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important.
Back with India Market Open right here on NDTV Profit. Let's pull up the implied open and show you what that is doing. Remember, oil prices are steady at high levels, and that is not, I repeat, that is not a recipe for upsides. No matter how other cues may look, till the time oil is higher, upsides are capped. How much of a downside opens up is a separate picture. But the good part is for our markets, and good morning to Kush Bora and Parag Thakkar. The good part for our markets, Parag Bhai, seems to be, I'll start with you today, is that unlike Q1, where oil prices were higher and there was fear that results will be bad, right now there is a bit of a shoring of the results looking okay. So therefore the market is not so worried that oil prices are high and results are bad. The market is now saying oil prices are high and we know that results are at least not looking as bad as feared. Would that be a
so for example, if you see the results of my favorite ICICI Bank, which is my largest trade, ICICI Bank, if you see the result of JSW...
6,000 stock hai. वो सब
6,000. Parag bhai, वो सब ठीक है. But have you seen ICICI Bank?
So, I am seeing excellent execution by some of the companies, like ICICI Bank in banking just stood out, right, completely. Like JSW Steel, for example, like Ultratech reported yesterday. I am saying all these companies are doing brilliantly irrespective of the situation. So that actually gives you a good feeling that at least companies are trying their level best and companies are performing. Macro, it is not in their control, right?
That's true.
With Ultratech, we were just discussing what would the numbers that Ultratech has posted mean for the entire cement pack within that region?
See, I'll tell
because yesterday we did see a spike on the entire pack.
Sure. So that is to be seen. I'll tell you. See, cement volume growth is 7% in the industry, right? Ultratech showed volume growth of 12.5%. So they're clearly outperforming industry, right? EBITDA per ton was about 1,200. In spite of whatever happened, as Neeraj mentioned, and due to war crisis, right? They have said that another 130 to 150 rupees per ton cost headwind can come in Q2. But I think the prices have held up in monsoon. So I would say that, see, Ultratech is a stock which will compound its EBITDA at 16% and it is available at 16 times FY28. It is very easy to remember. 16% compounding in EBITDA and 16 times at FY28 EBITDA.
This is at current price, by the way.
At current
if the price moves up, then it will change.
Sure. So basically, I'm sure it will move up. So I'm saying that unless of course oil goes above 100, or because some of the experts are saying this after the Houthis have blocked Naval Saudi Arabia.
Before we get to that, on the cement issue, and of course we have to get into the technical levels and all that, so quick answer here. It was suggested by someone we were speaking to in the afternoon yesterday when the numbers came out that for the cement pack you have to look at it in terms of which regions have outperformed, right? West and North have been incredible, and so therefore Ultratech looks incredible this quarter. It could well be no.
I don't agree.
You don't agree?
Ultratech will look incredible all the quarters. It will outperform the industry all the quarters. ICICI Bank, Ultratech, this kind of companies will outperform every time. JSW Steel, these are stars of India. This will continue to outperform. You see Ultratech's last quarter result also, last quarter, Q3.
The quarter before that, Q4.
Again, if you exclude for the lower EBITDA of India Cement, their EBITDA per ton was 1,296 per ton, which was again highest in the industry. And their volume growth is also highest because they have acquired India Cement and the other company also. The other company, I forgot the name. But the point is that because of that acquired capacities, their volume growth is always higher and they are turning around those acquired capacities.
Okay. All right. So you're convinced, of course. I could not argue against that, and I cannot as well. But let me go straight to Kushbora to talk about what the cues are on the technical levels. Because yesterday, it moved according to what we anticipated. We're looking at another downtick today. In fact, yesterday there was very strong breadth. There was very sharp moves by a couple of companies, or banks rather, that pulled the benchmark lower. But then we ended with a lot of green on the screen.
Yes, completely agree, and I'll come to that in just a second. First of all, very good morning, guys. And how about a friendly bet, right? See, my wallpaper on my phone is my kids, my family, right? I am willing to lay a bet that Parag Bhai's wallpaper is Sandeep Bakshi ji. Of course, he's spoken so much about ICICI Bank and off the camera as well. You know, he's spoken so highly about the gentleman. I think he's in the awe of Sandeep Bakshi ji. Parag bhai, chhe ke nahi? Batao. It's not. I'm kidding. No, but he's been spot on in that regard. And he's said it so many times over. कि एक result आएगा ना फिर ICICI Bank वो men amongst boys वाला differentiation हो जाएगा. And we're getting to see that. So kudos to you absolutely on that.
Thanks.
Now, see what's happening in the market. We've spoken multiple times about, you know, thoda dur raho, thoda ye consolidation hai. But you know what is starting to look like now? It's starting to look like base formation. Yeah, exactly. That's the thing. Breakdown nahi hai. This is starting to look like base formation for the next leg of up move for Nifty for 25,000, 26,000 higher levels. Bank Nifty above 65,000. Smids coming back. It's a matter of when and not if in my books, right? And as Neeraj hit the nail right on its head, and you know, as he does more often than not, we're still testing the the upper end of that range, 23,800, 24,300. बोल के थक गए रहे पिछले 2 हफ्ते से. But अभी भी हम उसी upper end के पास हैं. We're not testing the lower end. So as long as that support level is intact and we don't break down from here on, I think this is just going to act as base formation. We've digested a lot of bad news. एक बात बताओ. 5% HDFC बैंक नीचे है, बैंक निफ्टी 1% नीचे बंद होता है. On what day, what scenario would you have imagined that, right? So of course you've got a lot of other banks, PSUs and ICICI balancing each other out. So that's the beauty of the market right now, right? So for me, while I remain a little cautious because there is a lot of selling off that I'm seeing in the mid space, I think this is base formation. Right now, I wouldn't go long either on Nifty or on Bank Nifty. I still want to give it a day or two to see how this plays out. But Bank Nifty, by the way, not even tested the 200-day moving average near 57,300, 57,400, right? So I'm taking all of this as positive. Give it a day or two. We might still get an opportunity to go long positionally, once this settles.
Yeah, 200 points accounted for yesterday on the benchmark Nifty 50 by 2 entities. Exactly. 150 nearly points by HDFC Bank and a further close to 50 points by Axis Bank, and we ended with cuts of just about 0.4%. But those banks are going to be in focus today as well, and that's because of the clarification or rather update that was sent out by the Reserve Bank of India yesterday about how much has been mopped up or mobilized by banks on FCNR. And UBS has weighed in on this. They've said that banks have also, beyond the $17+ billion that they've mopped up on FCNR, mobilized $1.97 billion and $1.34 billion under the ECB and OFCB swap facility. Remember, these were facilities that were also announced. They got less of attention because of the big headline numbers for FCNR and the expectation of how much would be mobilized. The numbers appear ahead of indication from management commentary and results so far, according to UBS. They say that large private sector banks have hinted towards a pickup in coming weeks, which should support the overall growth. Macquarie has weighed in as well. They said that the FCNR flows spring a positive surprise. Foreign banks likely stepped up, aiding flows. View the disclosure as positive for the banking system. Strong foreign currency mobilization should ease domestic liquidity conditions, and it should improve funding visibility and reduce near-term pressure on banks' balance sheets as well. And finally, Jeffries on FCNR, they said that the mobilization through FCNRB is off to a good start. Conversations with banks indicate that this is mostly fresh money from UAE, Singapore, Hong Kong via internal and partner banks clients. Mobilization of $50 to $70 billion will be positive, especially if current IRRs or the internal rate of returns suffice, and best ways to play will be NBFCs and smaller private banks. Very interesting, right? Because what they're suggesting in that last bit, in case you did not understand, is that there was a worry just a short while back that banks are not able to mobilize as much as previously thought, and so they would have to adjust the rate that they offer. If they've mopped up as much as $17+ billion at this moment in the span of just about 10 days in July, then chances are that they will hit that $40 to $50 billion mark quite comfortably. View?
Yeah, so my view is that, in fact, $17 billion is a good number to start with, because a lot of time must have taken in the entire process also. So I would say that 50 billion looks now achievable. And last time also, when in 2014 we did this, the big money came in last 1 month. So I would say that the real, inflows should begin from August. And so August and September, I think, I think $50 billion looks achievable, that it will cross it in my view.
How do you play it though?
So basically, see, it is very positive for high CD ratio banks. Right, because those are the banks who are struggling for deposits.
HDFC Bank.
Like HDFC Bank, Axis Banks of the world. ICICI Bank is at 89%, of course, in CD ratio, and Kotak is also at around 89%. But I would say that generally it is good for the deposit-starved banks. Yeah, so that, see, this fear that interest rates were supposed to rise and now it will not rise because of the FCNRB deposits coming into the markets, I feel that all depends on inflation and how crude oil plays out and how monsoon plays out. But so I was not too much. So I will not be very bullish on NBFCs just due to the FCNRB thing.
But banks.
Yeah, banks. Yeah.
And ICICI Bank. It's the
But so now we the pledge is that from 8:40 to 9:20 we will not bring up ICICI because it is discovered. But the others which fell yesterday, Parag Bhai, you have mentioned that, though yesterday you were clear that you would not rush in, but you mentioned that you would use large dips to buy, but because there is a macro concern, you may not rush in. But the 5% fall on HDFC Bank, is this the opportunity to start nibbling?
Yeah, opportunity to start nibbling in a staggered manner, yes. Because valuations are in your favor, and in all probability, margins might have bottomed out. And for example, in my portfolio, I have left enough space for HDFC Bank and Axis Bank to buy. I'm full, like here we are talking, I have maxed out in ICICI Bank. But HDFC and Axis, I have space to buy.
Okay, fine. Perfect. No, but as Kush said, Parag Bhai, kudos to you and for people who heard you and agreed with the fundamental logic. Some people may agree, some people may not agree. By the way, guys, it's completely fine. Parag Bhai may go wrong as well. So that's completely fine. But I think on ICICI Bank, he's been spot on. Kush Bora, you've been spot on a number of things. I would want to know, what is it that you're picking up as a trade this morning in specific stocks?
Speaking of being spot on, 2 हफ्ते बाद बोलने मिल रहा है. The weekly picks have finally gone on and hit target too. There was this weekly pick that we mentioned, JG Chemicals, consolidated. By the way, missed stop loss by about a point or two. So yeah, saved by the bell. But yesterday, that stellar move on JG Chemicals, yeah, exactly, went on and hit a high of 505. Guess what that number is? That is the T2 that we had discussed on JG Chemicals weekly pick given 2 weeks ago, right? So that one, if you're still holding, book partially, hold the rest with initiation price as your trailing stop loss. And Gujarat Fluoro, the other stock that we discussed, which was the weekly pick yesterday, 43.30, that was the T1. Yesterday's high 43.29 and some change, right? So the T1's been hit on that for all practical purposes. Here to hold, but with trailing stop losses as your buying price. So that's those are the 2 updates. Feels so good. After 2 weeks I get to say something like this on the weekly picks now. As far as the stocks for today go, I'm still going with just 2 picks, but both of them on the long side. Anantraj and PG Electroplast. We've seen good moves on both of these. There's a golden crossover on Anantraj, ended near the high point of the day. Resistance near the 590, 595 mark, that also being taken out. Volumes also very healthy. So for targets of 630, 660 and a stop loss at 575, Anantraj is along. And PG Electroplast, remember this one we've been discussing for a while now. First target of 615 being hit. I think you can continue holding this up the targets to 640 and 665. Also bump up the stop loss to 600. PG Electroplast is also a buy.
Okay, so a buy on a PG Electroplast, that's going to be an interesting one to continue to watch out for. A bunch of other counters are also in focus on the back of their earnings that have been reported. Parth joins us with that list that one should be watching out for just before markets open. Parth, what do you have for us? Good morning.
Good morning, Hiral. So yes, the earnings season is going on in full force, and these are some of the earnings that you should definitely have a look on. The first one is Canara HSBC Life, where the business momentum has remained strong with their distribution-led strategy continuing to gain traction for the company. Their protection segment has remained the key focus area for the company, and the healthy growth in VNB was actually supported by the better product mix during the quarter. If we have a look at the numbers as well, then APE growth came in at 19% year-on-year to reach 585 crores. VNB saw a growth of 29% to reach 124 crores, while VNB margins also saw a growth of 150 basis points to reach 21.1%. The next one is Transformers and Rectifiers, or TARL, which has seen a weaker execution in the first quarter of FY27. Order inflows were up 218%. Order backlog also saw a growth of 26% year-on-year. But despite those orders, the revenue only saw a growth of just 8% year-on-year. This means that order wins are strong, but those are failing to convert into actual revenue figures for the company, and this is something they need to work on. Management has said that this was due to the lower utilization of one of their facilities, whose expansion is expected to be completed by August 2026. Currently, the company still maintains a healthy pipeline of 23,000 crore. And the last one is Advait Jewels. This was a recent listing, and they have reported not the Q1 results, but actually Q4 results of FY26. If we have a look at the numbers, and they are on the weaker side. Revenue was down 28% year-on-year. Net profit also saw a downtick of 46% year-on-year. EBITDA came in at just 13 crores, down 42% year-on-year, while margins also saw a downtick of 690 basis points. So a weaker set, but overall FY26 they have delivered a good set of strong growth, but the Q4 was seasonally strong for the company. So these are the three stocks that you should have on your radar on the back of earnings.
Right, Advait Jewels, of course, is the recent listing posting its Q4 numbers. Let's head across now to Soumit Sarkar, who is joining in to tell you about everything that he's hearing in the dealing rooms. Soumit, quite a few interesting stocks that are making the news, but I'm wondering what's on your list.
Firstly, it's Indian Hotels and Oriental Hotels. Now, there are buy flows in Oriental Hotels in the HNI desk specifically, and dealers indicate that Indian Hotels will acquire the other promoters a stake in Oriental Hotel. And dealers are also expecting this acquisition will lead to an open offer, which could be, and the price for that could be at a premium as well. For NTPC, dealers indicate selling pressure is largely over and the stock could bounce from the current level. So keep an eye out for NTPC as well. And a host of other counters like Shirley Engineering, Newland Labs and Inox Wind. There are buy flows on the institutional desk on all these three names, and delivery volumes are also seen on the higher side. And given that it is earnings season, stocks like Infosys, AU Small Finance Bank and Delivery see selling pressure in the large HNI and the PMS desk. Dealers are expecting weak Q1 numbers from all the three names. And on the flip side, there is Colgate and Navin Fluorine, where dealers are expecting strong Q1 earnings to come in, and hence there are buy flows that they are seeing on the HNI and the PMS desk. And one stock that we did indicate earlier was Sona BLW on July 16th, where we did indicate that there would be a positive note that would come out from a broking firm. And today UBS has initiated coverage with a buy rating and a target price of around 830 odd.
Okay, so those are the ones that you're watching out for in terms of HOS as well. But I think the hotel pack is looking very interesting right now because, you've just come out of the holiday season as well to some extent. So there is that uptick coming in there. On the charts, Kush, if you have to look at any of the hotels, I mean, Oriental, Indian hotels, yes, there are, good flows coming in there. But anything that you like?
I'm so glad that you mentioned this and Somit picked this up, because in the last 2 weeks, I think I've mentioned 2, maybe 3 hotel stocks, and I said that keep an eye on this space. EIH, Chalet, Indian Hotels. In fact, the first 2 have been our calls as well, did fairly well. So there was definitely some buzz, some activity, at least on the charts and on the price movement for some of these names. So I remain constructive. Indian Hotels right now consolidating, was off the low points of the day. So I would take this as a positive. Not enough momentum to go long on this from these levels, from an immediate trade perspective. But yeah, if you want to take a positional bet, then with a stop loss around the 700, 695 mark, you could remain constructive. I remain more constructive on EIH and Chalet, both of them.
Okay, so EIH and Chalet is what you're looking at. Parag bhai, Paytm is what I want to talk to you about as well. Now, numbers are looking very good in terms of what has been reported. However, they've not really gone ahead with the bonus issue. Do you think that the street will read that negatively, or do you think that's something which the investors are going to ignore?
Bonus actually changes nothing except for making shareholders happy in AGM. Okay.
Unless it's a dividend paying policy. Right?
No, I'm saying you are giving bonus, right? You are increasing equity, your EPS goes half, so there is no increase in the intrinsic value of the business.
But dividend paying companies?
No, dividend is a real payout, right? Bonus is
no. What I meant is, so okay, just viewers, the reason I brought this distinction because I've been forever a proponent that why do people get excited about stock split and bonus?
Yes.
But the difference between those two is that in stock split there is virtually nothing. At least for a dividend paying company, because your dividend also halves if indeed there is a stock split. In bonus, at least if there are 2 shares, everything else remaining the same because your value, etc. doesn't go up. But the bonus paying this thing of the company, if there is a policy that up 10% doge, so that number stays the same. Yes, it does.
The only my point is that
it does. Trust me.
In illiquid stocks, you give bonus and split so that liquidity improves and so the retail participation improves. That is the only tangible advantage. In a very highly liquid stock, in my view, there is no, except for pleasing shareholders in the AGM, it does nothing, in my view. Because it doesn't increase profits, it doesn't increase EPS.
In order to issue those bonuses, you take from the equity of the company, right? You take from the equity of the company to issue more shares, right? So therefore, hypothetically, the ability of the company to distribute cash as dividend goes down, right? When you make.
Which I'm saying, so if there is a company which has got a steady policy that we will pay X percentage of our this thing every year as dividend, if there is a bonus share and if you have 2 shares, then because everything else remains same, the quantum of dividend that you get increases, which doesn't happen if there's a stock split.
Sure.
So I'm just differentiating between a stock split and a bonus. For a dividend paying company, the bonus is better than a stock split. That's
I think what is best is this is my favorite topic. So I think what is best is a buyback like what Bajaj Auto has done. 12,000 rupees buyback where promoters
are not participating. So
that is real conviction. That is real conviction.
बाकी सब ठीक है, लेकिन Bajaj Auto है.
So I think every sector, Parag Bhai has his favorites and everything works well there.
So my clear view is, as a fund manager, what we have in control, right? We cannot control anybody's statements.
Correct.
We cannot control Strait of Hormuz. Only what we can do is we can buy good companies at reasonable prices.
Yes. One more stock I want to talk about is MTAR Tech. Last time where we saw that downtick that did come in terms of MTAR because of something happening with the Bloom Energy, there is a potential that you could see selling pressure today as well. In fact, yesterday that stock was locked in lower circuit. Now, Bloom Energy fell 8% yesterday. They're expecting some execution delays as well. And there is a regulatory hurdle for client Oracle's data center. Now, why MTAR will be in focus is because 55 to 65% of the revenues of MTAR come in from Bloom Energy, whose client, that is Oracle data center, that has faced a regulatory hurdle. In the last 1 month as well, MTAR is down nearly 30%. And there is an overhang of promoters selling stake as well. So there could be pressure that could continue in terms of MTAR Tech. Kush, again, on the charts, anything that you would advise investors to do on an MTAR?
Bhai Saab, what's selling? Of course, I can always argue low volume, but when a share is locked in lower circuit, of course, you don't expect, heavy volumes on this one. Had a good run up, was consolidating, but this is breakdown. I wouldn't panic just yet. Don't panic. If you have, if you have shares, of course, you'll not be able to sell when it's locked in lower circuit.
Correct.
But wait up for some time. See if it does hold around the 5,500, 5,450 kind of zones, and then consolidates from there on. Because the accumulation prior to this fall has been very healthy in this one. So I wouldn't panic, but Yeah, I mean, wait up, don't act in panic. That's the only thing. Watch for 5450, 5500 zone to be protected in days to come.
Okay, all right. Beyond earnings we've been bringing you all of the latest with regard to earnings, but there are several stocks that are grabbing the attention and news flow related, right? Varsha joining you to tell you about stocks in focus on account of being in the news. Varsha?
I'll be talking, 5 stocks. Let me start with India Glycols, wherein NCLT has approved or sanctioned companies demerger for biopharma and spirits undertakings. You have MCare Pharma also, which will be in focus on the back of company receiving approval for one of their drug which treats liver disease. You have Ashiana Housing, wherein their project Ashiana Oma has converted 224 units, and this has resulted into a sales value of around, or booking of around 372 odd crores. So keep that this stock in your watch list. You have Acme Solar Holdings, wherein a company's wholly owned subsidiary has commissioned 160 megawatt hour capacity of battery energy storage system project, and the commercial operation will start from July 22nd, 2026. Lastly, you have RITES, wherein they've signed MOU to explore business avenue. This is nothing but to collaborate in identifying business opportunities and jointly pursuing projects. And the MOU has been done with Mecon. So overall, these are 5 stocks which, apart from earning, which should be on your radar.
Interesting names that could be in focus as well on the back of we're not talking about earnings, but I think MCure Pharma comes to my list. They've received the CDSCO approval for Povistra, and this is used to treat liver disease. That stock was up nearly 4.5% in trade. In fact, Motilal Oswal also had an initiation on this counter yesterday. Parag, by any view in terms of MCure Pharma?
Yeah, it's a good company, great company. I've tracked them since their closing. They have been reporting very good numbers. I think they are very less communicating, so we don't see them in conferences and all. And trailing P is also 37, very comfortable. Return ratios are very good. Products are excellent. I think it's a decent company.
Okay. We didn't check with you, Kush, based on the moves that you saw in the large private sector banks yesterday, right? What would your strategy be at the start today?
So, Alex, the reason I said wait and don't go long on indices just yet, 2 reasons, right? Let me also club the Nifty in this. A Nifty PCR was at 1.4 on Friday. Yesterday, though it cooled off, it still remained at 1.25 thereabouts. So it's still elevated, and hence you don't want to go long. You might want to see this cool off a little bit. And the second thing is for the banks, right? The big banks, Axis, HDFCs, they saw a sharp drawdown yesterday. There could be some overhang that remains, and you could see them fall, even today, or maybe if not fall, at least consolidate sideways. So, like I said, you want to perhaps wait for a day or two, see if this dust settles, and where it settles, more importantly, there will be an opportunity to go long on some of these names. Maybe not just yet. Give it a day or two more, and from here on, it will become attractive. At least Axis, by the way, before the fall, ICICI and Axis, amongst the big names, were the 2 banks that had momentum play. So that could return on Axis. HDFC has always been buy and hold kind of a story, right? So you might get attractive levels on that as well. But from a momentum play perspective, Axis might make a comeback.
On the earnings front, Parag bhai, I'm not sure if you track this company, CMPDIL. This is Central Mine Planning, which is a subsidiary of Coal India, right? And I know that there are some analysts or market veterans out there that have said that in the current scenario, globally, companies that pull resources from the ground should be looked at very closely. Simple point,
Hard
right?
assets.
Hard assets, right? And from that perspective, this is a company that facilitates that. It's seen a 62% EBITDA improvement.
Yeah. So it's a company worth evaluating. I don't have a view right now.
You don't have
but I'll share the view in next 2 days.
Okay. We'll check back with you. In the meanwhile, Kush, I don't know if you have enough data. But based on what you can see?
Yeah, from a very near-term perspective and from with the limited data that I have, this fall that you're seeing in the last 15 sessions or so on very low volumes, I wouldn't be concerned. So if you did buy it, in the IPO, or if you have it from much lower levels, I don't see a reason why you should sell. There's a support zone around the 225, 230 zone, positional one. So keep that as your stop loss and continue to hold. Not the structure's not disturbed by whatever's happened in the last 5 to 10 sessions.
Did you have a chance to look at Paytm? numbers?
Yeah, so I saw the numbers are looking very robust. Very robust, yeah. EBITDA of around 220 crores, if I'm not wrong. Market cap is 86,000 crores, but I would say that the numbers YOY, so all metrics
EBITDA
are
was
moving.
203 crores.
203 crores, yeah. So I think the metrics are moving in right direction. So the people who track this metrics and finally they say that okay, now the earnings will look better for them, this is I think a good stock to hold, so like Nykas of the world and various.
Among those metrics, would you say that the gross merchandise value is something to track, the growth in much?
That you don't ask me, because I track only profits and cash flows.
But you know, I mean, so two factors. One technical in nature, of course, but the first one, as the Goldman notes that margins for Paytm could double versus the Q1 levels by FY28. So they are on a right footing, part one. And part two, you know, after being sluggish in that 1100 to 1200 band for a really long time, I think the last month and a half or maybe something like that, it's kind of broken out of that wedge that it was in. At some point of time, the Nifty will do that, but for now we stick to Paytm, and Paytm has done that. And if you know, and that is why there's also a bit of a momentum behind it, if you will. That maybe charters like Kush might actually find favor with that argument. Maybe, I don't know, but maybe they do. So keep an eye out for that as well. Actually, while we're at that, and markets are starting, so make it quick, Kush. But Paytm on the charts, does it look attractive?
5 weeks of positive closing, the momentum still with it. My concern is 1350 because it took a very long time last year towards the end to break that level. So 1350 closing. If it does sustain above that, then you have that another leg of up move that takes it towards these levels, which may not be sustainable at open.
They won't be. They certainly won't be. But yeah, Paytm could well turn out to be a good stock. By the way, the markets have started, and Ruchit Jain joining in. Just go to Ruchit in a moment. But the pre-open rates, very quickly, just mark what the Nifty and the Sensex are doing, what some of those banking names could be doing as well, what Ultra Tech could be doing, what Paytm could be doing, what Rallis could be doing. I think those are a few names top of the mind that come to me based on the stocks that Hiral, Alex and I chose. Maybe I'm sure there will be others too. But Rallis may be a bit of a positive move.
Paytm I'm curious about.
You do watch out for Bluestone and
Bluestone.
Yeah, Bluestone, pull that up. Paytm is looking like it's going to have a strong start. Bluestone was decent as well. Let me pull up a few more names, right? Canara, HSBC Life, healthy growth in VNB. You had Soba that reported its best quarterly pre-sales from the real estate pack. We've been failing to find a comprehensive trend for this pack because there have been a few names that have disappointed. Action Construction had a pretty decent set of numbers, 20+% growth in PAT. ACE, Action Construction is up about 1.4%. Rallis India, strong numbers. CMPDIL, which we spoke about, or Central Mine Planning, EBITDA increase of as much as 60+%, so it looks good. On the weekend, a couple of names stand out. One, the recent listing Advit Jewels. The PAT is down as much as 46% in the fourth quarter. The stock is losing ground. And Tarrell, which is transformers and rectifiers, which is probably losing ground as well. Ruchit Jain with us this morning. Ruchit, very good morning to you. And seemingly the banks are going to be taking a front row seat today based on the FCNR deposits update that came through yesterday and the kind of selling that a few of these names have witnessed. So what is the strategy that you will employ both for the benchmark and the Bank Nifty?
Yeah, hi. Very good morning to everyone. The thing is that although we have seen that 1 days of correction yesterday, but overall trend for the market is not yet negative. No, we have seen a consolidation in last couple of weeks session, but the good thing is that on the Nifty front, the 24,000 important support is being intact in spite of all the news flows that we have seen on the global geopolitical or the crude oil going up from $70 to $90. But still, in Nifty is not breaking the 24,000 mark. So I think till that is intact, there's nothing too much to worry about on the negative side. So any kind of decline if you get, then keep a stop loss below 24,000 and remain constructive on the markets for a possible up move towards 24,500 in the near future. Bank Nifty index to overall structure does not look negative. 57,000, 56,800 has acted as a good support. Even the 50-day support is placed over there. So over here also, I think the momentum would continue on the positive side, even if we get some minor declines. So we are positive on both Nifty as well as Bank Nifty. More from a bit near-term future. For next 1 or 2 trading sessions, we may see a continuation of that consolidation. But positional traders should use these declines, small declines, which we are getting as a good buying opportunity.
That's with regards to levels to watch out for. Richard, what would your top picks be at this hour?
Yeah, so a couple of names from the broader markets which are doing well. One is Lloyd's Metals, where a good consolidation breakout has been seen yesterday, just hinting at a resumption of its broader uptrend. The volumes are good along with the price up move. So traders can go long on Lloyd's Metals with stop loss below 1855 for potential up move towards 2000. And within the sectoral performance, I think chemicals as a space has started doing quite well. You look at stocks like Navin Fluorine, we have a consolidation breakout over there. Gujarat Fluorochem has seen a good price volume action. SRF has given a breakout from its consolidation. So I think the sector as a whole is hinting at a good volumes picking up over there. So this is one space to watch out for. We like Gujarat Fluorochem from there, which has got good breakout with volumes yesterday. So Gujarat Fluorochem still good potential is there on the high side because it has already gone through about years of consolidation phase. So Gujarat Fluoro can be bought with stop below 4200 for potential targets around 4500.
Okay, so you have interesting picks that you're talking about as well at this hour, but it is 9:05 and it is time to focus on the brokerage call of the day. You have a Goldman Sachs who's bullish on a Jindal Stainless, and Sharad Dubey standing by to tell us more. That stock, at least in pre-open, is indicating a 2.5% up move. Sharad, good morning. And that initiation call in terms of this company's Jindal Stainless, I would say, by Goldman Sachs is interesting. What are the key highlights that they're pointing out?
Good morning, Hiral, and you are right. There's a significant upside potential coming in from this report by Goldman Sachs on Jindal Stainless. They have initiated a buy, but the target price is at 1,000 rupees per share. Now, of course, that's a significant upside potential. It's a major beneficiary of the rising domestic consumption at play. Also, the capacity expansion, that is where a global boost is expected in the leadership, and it's best placed to gain from the rising domestic stainless steel consumption, especially the value-added segment. That is where the street is factoring in some bullish sentiment, and the sufficient balance sheet headroom is also there to increase the capacity by almost 2 times. And lastly, Goldman Sachs have stated that there is a reasonable valuations at play in the expectations of the ROE going forward, and that is why we are seeing a big upside potential from the current levels.
That's a Jindal Stainless, 1,000 rupees target price. Parag bhai, any view, because they're talking about a domestic consumption play right now for a Jindal as well.
Yes. I think this is a good company. I have been.
Would you buy at current levels?
So yeah, it seems okay. I don't have it right now in the portfolio, but I had it actually. It's a decent company, and as this report has highlighted, the use of stainless steel is actually increasing in the day-to-day infrastructure, like metros and elevators, and construction of buildings are also now. So I would say in defense, I would say that use of this particular commodity is increasing, and this company has done very well in terms of execution.
Okay, so from an execution perspective, again, you're
and valuations are not outrageous.
Okay. You have a Bharti Hexacom also, but HSBC has initiated a buy. They have a target price of 2,050. What they're saying is that the growth is robust and the focus is on shareholder returns. And Hexacom has a superior growth outlook to its parent, Airtel. I will take a question with Parag bhai on this one, but apart from that, you have a UBS on Sona BLW as well, who has a target price of 830, where they've initiated a buy, and they're saying it's supported by an increasingly diversified business mix, and there are multiple growth engines in place. So Sona BLW, Bharti Hexacom. Ruchit, on the charts.
Sona BLW looks quite interesting. We have consistently seen outperformance for this stock. The price of moves have been supported by good volume, so I think that outperformance could continue. Positionally, if you look at some weekly or the monthly, a bit longer time frame chart, then the stock has potential to rally towards 750, which were its October 2024 highs. So if one has positions can continue, even fresh buying can be done. For Bharti Hexacom, I would wait for a follow-up move. We did see some put-back move from 1450 to 1650 in last couple of weeks, but 1650, 1700 has been acting as a resistance since quite some time. So if there's a follow-up move or good volume seen, then one can look out for Bharti Hexacom.
That's Bharti Hexacom. Parag bhai, that you're positive with regards to Bharti Airtel. How are you looking at a Bharti Hexacom as well?
No, I'm positive only because as this report says, it has a higher growth, and that's why valuations are also a bit expensive actually. It is 5% cash flow yield versus Bharti's cash flow yield, which is higher. So I would say that Yeah, and it is also same management, right? You are betting on Sunil Mittal and Mr. Gopal Vittal and those. So it's a great opportunity.
So between Bharti
but I don't know exactly
Airtel.
if there is any supply overhang in Bharti Hexaco or not.
Okay.
In Bharti Airtel, we are hearing, right, that some sale from Singtel can happen.
But you know, in a lot of these names, for example, Polycab has been beaten down simply because there's a talk of a block coming. A lot of these might get actually done in a block window and get absorbed and will not be done on the market. So therefore, the supply hitting the secondary market and causing a price disruption may actually not happen because of the event.
Yes.
In anticipation of the event, that has happened. So be wary of that short trade in both Airtel as well as Polycab. In Polycab, that short trade possibly is worked out till now. It may not really necessarily. So please keep that at the back of your mind. Kush Bora, on the charts, Airtel and Polycab, two different sectors completely. But hey, charts don't differentiate between sectors, right?
Oh, they don't. You could give me India's population and its growth rate, and I'd still be able to give you a view. Yeah, sometime.
Right now, the charts are looking strong.
Indeed. So Polycab has a support near the 8800, 8850 mark. So you don't want to, as you rightly pointed out, go short right now. And like I said, I mean, there was selling. The stocks actually come off the highs of about 10,000 odd. But now's not the time to sell. Perhaps you could see some consolidation, and I'll actually look for a positional long trade on Polycab from here, but wait for that trend to resume and this fall to settle. Bharti, yes, it's made an up move, but the 200-day moving average around 1950, oof, the stiff resistance, 5-7 sessions of attempts. Once it crosses that, maybe it becomes a momentum play up until that. If it's a positional play you want to hold it for 6 to 12 months, then you could very well get into it. Until 1950 is taken out convincingly, I wouldn't recommend a momentum trade on Bharti. For anyone who's holding, positional stop around the 1900 mark.
But I'll tell you an observation. I think our poos from middle class people like me and upper class people like all of you are going up, simply because I'm now realizing that we don't have a choice but if and when we go outside to take that plan for 10 days, which is at $4,000, etc. And if you just do 2 trips, right, and add 8,000 to the normal bill that you're doing, your ARPU at least has gone up. Now, of course, Airtel doesn't just cater to the people who are traveling abroad, but I think that segment and that cohort is picking up. So I wouldn't be surprised at some point of time if the actual average revenue per user numbers start.
That's an interesting observation on international travel and those packs that are taken. Yeah,
it's impossible to not take that pack because we all live on OTPs. And unless you have that pack, you don't get those.
That is true. That is very true. That is very true. I do want to point out that the Ather QIP has closed. They've raised 1,300 crore rupees. Pull up those data points. The issue price, remember, was 1202. The stock is trading at 1302 as things stand right now. And a few allottees that have come through. It seems like HDFC MF has taken a bulk of it. Close behind is Aditya Birla MF, Axis MF. Soon after that, Edelweiss Mutual Fund is also taken some. It's mostly mutual funds that have lapped this up. But there's also Abu Dhabi Investment Authority that has grabbed about 5% of the pie. ADIA, that's what you see at the bottom of the list. It'll be interesting to see what the stock does now that the QIP is closed. But beyond that, there are a few stocks in the automotive pack to put in focus yesterday. If I remember correctly, Maruti Suzuki lost ground. So let me ask you a broad view. Actually, Ruchit, let me come across to you. Ather Energy is one. The other, of course, is the broader automotive pack. What are your picks?
Well, I think Ather Energy should stand out going ahead of. Overall, auto as a space has seen some consolidation over last 1.5 to 2 months. There are no signs of breakout yet. There could be some stocks which can relatively do well, like IHCL Motors within the entire auto space. But yes, if I have to compare it to Ather Energy, the trend seems to be quite strong over there. Although it has already rallied, but still no signs of trend reversal. So I would definitely advise to go with the stock which is trending higher.
Parag bhai, you have TVS Motors and Bajaj Auto that will be reporting numbers. What's the key expectation here? Do you think ahead of the numbers there is some moat there?
Yeah, absolutely. Because Bajaj Auto, for example, I've seen 250,000 exports per month, and rupee at about 94, 95 at least. So I think the Bajaj Auto, in my view, should be the only auto OEM which will report YOY EBITDA margin increase. And my expectation is they should report about 30% EBITDA growth, YOY. and EBITDA margin of about 20.5%. That is my expectation. And plus, they'll be launching many new products in this Q2. Of course, TVS will.
Export mix is good, and so therefore margins could improve.
Absolutely.
That's a good point that you're raising. I wonder what the view, Ruchit, is on the charts for Bajaj Auto specifically.
It's looking positive. Recently, we did see some decline from 10,800 to 9,600, but the 200 EMA acted as a good support base, and the stock seems to have resumed its momentum again. So 10,000 is now the 50-day support for the stock. So till that is intact, one can trade with a positive bias.
Just about a minute left, and so therefore let me throw it open to Kush Bora to come up with one stock that we've not spoken about so far.
And I'll go with something that we have spoken about as an opening trade. Anantraj looks good, opening with a mild uptick. So just to reiterate those targets, 630, 660, stop loss at 575. Still looks good for a long trade.
Ruchit, just about 20 seconds to go. Any stock that you've seen in the pre-open session that you like, that we've not spoken about?
Yeah, Karur Vysya Bank seems interesting. Company has declared its results yesterday, so pre-opening prices are showing a good strength. So if the follow-up move is there, keep stop loss below 300, go long for potential targets of 330.
Okay, Karur Vysya Bank. And I think the notes on KVB seem strong as well. So bear that in mind too, Ruchit. Thank you for that. But as the markets get ready to kickstart trade, expect a bit of a stick maybe. The question only is, can we recover from that stick and a little bit of a soft start, or do we stay sluggish with a downward bias? But here come the first trades. Actually not as bad as the pre-open was suggesting. So is there room for this to slide further is the key question. The market breadth is looking supportive. 1051 to 639 declines, which is actually a pretty strong market breadth. Banks are not cracking, unlike yesterday, which is a big thing. And IT, which was, well, actually thwarting some of that pressure yesterday, is in the green as well. Small cap index should come up on your screen next, because the mid caps, of course, are flattish. Small caps 0.33%. Not bad, really. Let's get the heat map up on the screen. Show you what's moving and what is not. Is it even, Stevens? No, a bit more green, little red. HDFC Bank still has pain, so it's still down about 1%. Eternal, Maruti, etc. Reliance, a bit of a pain as well. Actually, not pain really. It's very, very flat, Reliance, to be honest. So HDFC Bank, in some sense, is a lone ranger today in terms of heavyweights being down. Maruti too, little, but HDFC Bank. On the flip side, though, Eicher Motors, Shriram Finance, Tata Steel, ICICI Bank does well yet again. So, the one large bank which showed NIM performance or net interest margin performance continues to do well. Kotak recovers a little bit of lost ground, but minor so, if at all. Alex will have and Hiral will have better luck, because there is precious little on the index today to talk about. So I'm going to hand it over to Alex with this one note. Watch out for these two, HDFC Bank and Maruti, the two putting a little bit of strain on the indices this morning.
Yeah, absolutely. In fact, I'd be curious to pull up the contributors chart just to see how much of an impact they're having. Yesterday, remember, HDFC Bank alone contributed 146 points on the downside. Today, it's about 32 points. It's kind of balanced by the combination of ICICI Bank as well as State Bank of India. Bharti Airtel, at least for a second day in a row, is gaining ground. Let's see if that lasts through the session. Pull up the broader markets, and the mid-cap index and the small-cap index trading with gains of, I think, about 1/3% each. I'm talking about the intraday chart. If you can pull that up and see if you can. If not, then that's fine. It's up about 1/3%. The small-cap index should also be about 0.4% up. So holding at the high point of the day. Let's pull up the sectoral indices as well and see there's probably quite a bit of green on the screen. Indeed, there is. On the lower end of the spectrum, these two indices were actually up and about in trade yesterday. They were among the top performers, losing ground today, but PSU banks are looking okay. Metals are up about 0.6%, and then you have the Nifty Bank that it's trading with gains of about 0.4%, despite the fact that HDFC Bank is an underperformer in trade today. Let's talk about individual counters, and earnings reactions are front and center. Pull up something like a Paytm, where you've had an improvement in the EBITDA number, 202 crore or thereabouts, but it's not really reflecting in the stock price. It's just about 0.2% lower at this stage. Canara HSBC Life, there is strong growth in the VNB, value of new business. That's what you look at for an insurance company. It's up about 5% or so. Sobha should be positive, should be gaining over 3%, in fact 5%, record pre-sales in the latest quarter. Action Construction has had a very good set of numbers as well. It's up about 5%, 20+% growth in the PAT number and improvement in the margins as well. Bluestone Jewelry had a pretty good quarter. It maintained its PAT performance, or actually stayed in the black, but it's reported a very strong same-store sales growth as well, which is positive. Rallis India, arguably, I thought would be the stock of the day. It's not moving as much because it had a fantastic quarter. Let's see if it builds momentum through the day. For now, though, it's just about flat. CMPDIL, which is a central mine planning, is gaining about 1.5%, pretty muted if you consider that 60+% EBITDA growth. And then on the other end of the spectrum, you have a weak performance by Transformers and Rectifiers Limited. It should be losing ground. It's down about 5.4%, and this is on account of weak execution during the quarter. And the new kid on the block, Advait Jewels, has posted a profit slump of over 40%, if I remember correctly. It's down about 3%. A few other updates for you. India Glycols, there's a demerger that has been sanctioned by the NCLT. Emcure Pharma has gotten a approval for one of its drugs. It's up about 0.9% that treats liver disease. Ashiana Housing, the project Ashiana Oma, has converted 224 units. Oh wow, it's up about 9% with sales of over 300 crore rupees, 370 crore rupees. Acme Solar, an arm is commissioned 160 megawatt per hour capacity of BESS project. You have Rights, which has signed an MOU to explore business avenue with a company called Mecon. It's not doing too much in trade, but I think I've covered quite a few of the newsmakers, Hiral. I'm wondering in the broader markets whether there's anything more that you're spotting.
Thanks, Alex, for that. You know, Wanbury is another one. That's a pharma company. The Tanuka facility has received 6 US FDA GMP inspection observations, and that stock is under pressure, 5.5% downturn coming in there. MTAR is another one that we've been talking about as well on the back of the Bloom Energy downtick. Let's pull up that one again, locked in lower circuit in today's session as well. Apart from that, Karur Vysya Bank is an interesting one, 7% up move. Jaiprakash Power is seeing some smart moves. JK Cement today is seeing a recovery after that slump in yesterday's session. Chennai Petro, MRPL, a few of the other names from the oil and gas pack. Data Patterns, Dixon Tech, Kalyan Jewelers has now started to see some bit of profit booking, and the pharma pack as a whole, which was really up in yesterday's session, is seeing some cooling off effect in today's day of trade as well. But Karur Vysya on the charts, Ruchit, 7.5% up move coming in today, and again it is an earnings reaction that we are seeing for a second day, but is there further momentum on this one?
Yes, I think we should see a continuation of the uptrend. We just discussed before the market opened that the pre-opening rates were showing a positive tick post the numbers, and the stock has even surpassed its entire consolidation of 2.5 months. So 330 is the initial level that we would be watching out for. If the stock managed to surpass 330, then the previous highs were around 342, which were in the end of Feb. So 342 is also quite possible in the near term.
Okay. 7%, what a pick, Ruchit. So really strong show. Thanks for that. Ruchit, just one very quick view. I don't know if we spoke to you about Bajaj Auto or no, but if we haven't, is that a trade that you would take, Bajaj Auto, ahead of the numbers?
So Neeraj, I think 50 DEMA support is still intact, which is around 10,000. So I think just instead of trading just for the results, I think if one has a positional view, then it's still a good buy at current levels, but stop loss would be below 10,000 level. So it should be somewhat around 4.5-5%. So if one can manage that, then definitely one can create fresh longs here as well.
Parag bhai, now you are of course constructive Bajaj Auto, and I'm guessing the idea is not from a perspective of just this quarterly results. No. What's your rationale?
So my rationale is very simple. See, it is one of the reasonably valued stocks. First of all, 21 times or 22 times, because when we started discussing it was around 9,700, 800. Now it is 10,500. So it is 22 times, let's say 22 times FY28 earnings. So first of all, reasonable valuation. A company had 20,000 crore net cash in March 26. They have a distribution policy that anything above 15,000 crores, they'll distribute as dividend, right? Or buyback. So last time they did a buyback of 5,630 crores at 12,000, where promoters have not participated, which is one of my key reasons to be bullish. And on the business side, exports are booming, right? For example, Latin America, they are now selling 50,000 vehicles per month. Latin America, and these are very high margin business. So about 20% margin with the company on an average makes, right? So, and they're also sending 5,000 three-wheelers to Latin America. Nigeria, which was the key market for them, fell from 60,000 to 0. And now it has recovered to 30,000. So it has also a good room to grow. So exports, in my view, 250,000 is still a lower number, although it contributes meaningfully to the profits because rupee is at 95, 96 now. I think for next 2 months, according to what Mr. Rakesh Sharma has said, if the logistic issues are not there, then they can export 3 lakh vehicles a month. Plus, they have also said, Mr. Rakesh Sharma has said that July, August, September will see number of new launches in India itself, so which will address the main problem of the market, which is domestic market share, right? So if everything comes together, this quarter's results, booming exports, electric three-wheeler volumes rising. In electric three-wheeler, they have 40% market share. In ICE engine three-wheeler, they have 70% market share. And Mr. Raju Bajaj has clearly said that we want to get there in electric three-wheelers also. And as I said, the absolute EBITDA, what they make in electric three-wheeler is more than ICE engine because electric three-wheeler is valued at 310,000. Right? So I'm saying it's a clean, profitable company, so excellent corporate governance.
And KTM has turned around.
KTM has turned around. So whatever they touch, they turn it around. So I think it's a cash generating machine which gives you a lot of cash also as a shareholder and still continues to grow. Right. So I think, and plus, see, market always focuses on very near term also. So this quarter is also looking good because of the export number and the margins which they make on exports. The only thing is that in long run, EV, because EV is also growing significantly, and EV Chetak, they have just broken even. So that might pull down the overall margins a bit. So for that, I want to publicly give a suggestion to a company that EV business, they can actually demerge, give shareholders, Bajaj Auto shareholders the shares of EV and then list it separately. Because if Ether, for example, is a great company.
Like you will come and sell it off, no?
No, but
they don't want that.
No. The EV business of Ether, for example, gets market cap of 50,000 crores. And still it is not EBITDA break even. Right?
So Bajaj Auto will get
Bajaj Auto's market cap is 288,000.
But what is the market share with Chetak?
23%. Last month they sold. They had a 23% market share in EV, which is number 2 after TVS.
Interesting. Wow,
thank you, Parag Bhai. That's so if people needed to know why Bajaj Auto could be a good idea, as per Parag Thakkar, now you know the reason why. And fabulous work with the graphics production team. So thank you for that as well. Kuch Boda, we've discussed Bajaj Auto at length. Everything else notwithstanding, if you had to take a fresh bet right now, what would that be?
So from a very near-term perspective, you know, my policy is very clear. Never trade on the day of the result. Aaj hai result, correct? Yeah, so you never trade.
I'm also adding caution to it. Don't buy it today now. Now wait it out for results only.
Yeah, absolutely.
Because it is just one day now.
So. True. But from a very near-term perspective, medium-term perspective also, trend is very bullish. That 9,500 level, from there that rally started, hasn't really seen a meaningful pause. Volumes also very healthy. Major breakout, by the way, will come above 10,800. But like I said, if you're holding, continue to hold. Bajaj Auto positional stop near 10,000 or maybe just under that. 2 stocks I just want to quickly highlight. Again, they're the weekly picks that we discussed. The reason I'm highlighting is because they are continuing from where they left off yesterday. JG Chemicals, bring that up. In fact, if you can bring up the last 2 days chart, 10% move yesterday on that one, and today again about 7% or so. So agar aapke paas hai, so you should continue holding with trailing stop loss, book some profit about 50% or so, but then keep trailing your stop losses higher. And the other one is Gujarat Fluoro. Now officially the first target has been hit. Continuing from yesterday's move, you could very well continue to hold this one and bump up your stop losses close to the 4,300 mark. So JG Chemicals, Gujarat Fluoro, weekly picks doing well. Continue hold, keep your trailing stop losses. Keep trailing your stop losses.
I know that you went back to Ruchit. Ruchit, I know you've weighed in on Karur Vysya Bank, but I do want to give you an opportunity to revise your levels once again, because the stock is at the high point of the day, as much as 9% higher. Would you take money off the table now?
Not really. 330, it was the target that we gave before the opening. It has tested at 330 mark, but the kind of follow-up buying is there. I believe that could be surpassed, and 342 would be the levels where I would take advise to take some money off the table because those were the previous swing highs. So one can wait for levels around 342.
Ask you about Action Construction Equipment as well. Among the earnings reactions, this one actually stands out, 20+% bottom line growth in the quarter gone by, and expansion in margins taking place as well. Pretty strong and robust top line growth as well. But on the charts, we're at a 6% uptick as things stand right now. What is the potential for upside from here?
So it has a potential to rally towards 1100 kind of level. So this looks positive because last 10-12 days the stock has already consolidated around its 20-day EMA, and now it's showing a follow-up move. So 1100 could be seen. Only thing is that for fresh buying, the stop losses are also equally lower. So 1:1 risk reward ratio is there. So I would advise if anyone already has long positions, continue to hold on. If we get any dip, then use declines as buying opportunities.
Interesting to spot in the cement pack that JK Cement is making a little bit of a comeback. Remember that it didn't post the best numbers. Its margin performance left something to be desired, and maybe it's catching on to the Ultratech effect, which is what saw the stock go up. In fact, over 2% yesterday and a further 1% in trade today. The question is, for this cement pack as a whole, are you seeing any options to buy? Would you stay clear for now, wait for the dust to settle? What is your approach?
Yeah, so for me, the cement pack is not, aankh band karke kuch bhi buy kar lo types move right now. There are 2-3 names that very clearly stand out. Ultratech is obviously one of them. Ramco had seen quite a bit of accumulation over the last couple of weeks. Right now it's consolidating, so maybe you could give that a miss. Shree Cement, this is the one that's actually had positive crossovers, has a very decent volume accumulation, price action also very healthy. So yeah, this is something that you can consider. I mean, I know it's a big ticket item, so might not have too many takers again, but 27,800, about 29,000, these are the levels very much likely. Stop loss close to 26,200, 26,000 marks, risk reward ratio favorable. So Shree Cement for a fresh trade also looks very interesting.
Okay. Anything on a Tina Rubber on the charts? Because very strong set of numbers. That stock is also seeing some smart moves today. Kush.
Very interesting name that you bring up. I mean, doesn't usually come into discussions. Has had a steady run up over the last months, but yesterday and today, whatever trades or whatever gains were to be had are done. So I think now you should book profit partially, maybe 50 to 75%, hold the rest with 1150 as your trailing stop loss, but obviously no trade initiation now on Tina Rubber.
Yeah, again, a company which has given guidance of 25% CAGR for the next 3 years, or something like that, and therefore maybe
43%.
Yeah, pretty good going in the last 1 month. Recycling. I wonder if Gravita has had a similar move to just as we mark some of these recycling names. Gravita India should come up on your screen as well, just to see if that has also had a good move over the last 1 month, please, if we can. Since Tina Rubber is up 60%, Gravita India
5%.
1 month.
5% or so.
5% or thereabouts, not too much. Okay, Jamin, Ruchit, Kush, Parag Bhai, thank you so much for joining us today and giving us your thoughts. Really appreciate your time this morning. Okay, shift focus as SBI MF gets ready to get listed, and then we have the 4 or 5 large asset managers listed, alternatives about to start getting listed. We have one in the anvil, and we already have REITs out there. So the money managers are now getting listed, and people who don't have the ability to necessarily own or deploy large pools of capital into AIFs, PMSs, etc., now have the choice of buying the stocks of some of these asset managers, because this industry could be entering a next major growth phase driven by domestic capital, deeper financialization, and rising interest in alternative assets. Now, the idea of doing this conversation with 2 eminent experts is to just try and figure out what is it that both of these guys who run asset managers, both on the mutual fund side as well as on the alternative side, think of the growth prospects over the next 5 to 10 years. And let's kickstart this conversation with Vishal Kapoor, CEO of Bandhan AMC. In a bit, we'll get in Gopal Jain of Gaja Capital Partners as well. Vishal, great having you. Thanks so much for taking the time out and being with us. As a lot of your peer sets get listed and people get a slice of buying into the stocks of those or shares of those companies. One would love to understand from you, as somebody who's running this business actively, how do you see the growth path for an asset management firm over the course of the next 5 to 10 years?
Firstly, for having us, but on the question, we are slightly conflicted because we are in the asset management business, but we do believe it is a fabulous business to be in. It's not just one or two or three, but many levers that are helping us. Firstly, of course, there is nominal GDP, which is growing quite well, and that has its own income and savings effect on a large demographic which is beginning to come into the middle class. In addition, we have a larger financialization theme. So as people save more, a lot of more proportion of that assets is coming into financial assets. And within that financial assets, over the last decade or so, we've seen that mutual funds have been beneficiaries and clearly getting established as the primary savings vehicle and investment pool for retail savers. So these three factors combined is, I think, giving us a runway, which is really, I think, still in the early phases of its growth. We've done very well, as you know, as an industry. The industry has grown assets at significant high double digits. But as I look ahead, I think there is still so much room to grow. Like I said, it's still in the early innings of growth. Clearly, over the next 5 years, I would expect this to continue growing at significant double digits. Doubling from here would not be surprising at all.
Interesting. Okay. Gopal Jain of Gaja Capital also joins in, and Gaja, I believe, is slated to come out and get listed sometime later this year too, in the alternative space. So not in the retail mutual fund or not in the mutual fund space, but in the asset management space firmly. Gopal, good having you. Thanks for joining in.
Good morning. Good morning.
We kickstarted this conversation with Vishal talking about how while there has been some road to growth already established over the last 5, 10, 15 years for the mutual fund industry, for asset management as a space, there is, according to Vishal, a lot of room to grow for the next 10 years at the very least, maybe even longer. What is your sense, Gopal? How do you see the next 5, 10 years for the space?
No, absolutely. If you just look at the numbers speak for themselves. I think Vishal was being very modest when he was talking about the growth in the mutual fund industry. If you look at the last 10 years, mutual fund industry has grown 6.3x. And, the tailwind for asset management, for the tailwind for savings in general, and equity in particular, is longevity. So, India is broadly, in terms of its social indicators, in terms of median age, in terms of life expectancy, where the US was 40 years ago. And you see how far the US has come in terms of allocation to both mutual funds and funds in general and alternatives. So alternatives in the US were less than 1% about 40 years ago, and they are 3 to 5% now. Similarly for equity. So the drivers are longevity. The tailwind is longevity. The drivers for the two businesses are a little different. The growth for mutual funds has been 6.3x. The growth for alternatives in the same phase has been 43x. This is just the base effect. So mutual funds were growing off a larger effect. Both the industries are compounding, and Vishal would have a better estimate as to how does he see the industry growing forward. But you can expect, as the bases become larger, both for mutual funds and AIFs to keep growing, but maybe not grow at the same rate that they've grown in the last 10 years.
Which is fair also. So Vishal, let me take that question to you. MFs have a larger base. The next vectors of higher than average growth, do they come by deeper penetration and use of technology, or do asset management firms like yourselves, which are powerhouses in the mutual fund space, also adopt alternative products as a way of growth? Because that space, you can argue, relative to the world or even in absolute terms, is still in its nascency, if you will.
Question, Neeraj, and I think at least for Bandhan AMC, I can say that we look to grow on the alternate side as well. So we do have a Vidarth alternates platform. We are in the SIF space as well. So that's the new emerging product, as we all know, in the middle with the Aruda SIF. So a full service asset management company offering mutual funds, SIFs, alternates, etc., can definitely be one format for driving growth across the various segments that are emerging. And I think, like Gopal mentioned, the growth ahead is just many fold. Just looking at our penetration, AUM to GDP is a simple measure that is used globally to look at how much more headroom we may have. We've done very well, but we are still in the 20% odd mark. Keep in mind that most developed markets are more than 100% AUM to GDP. The global average is close to 70%. So even if we look at the next 10 years of doubling from here, we are still looking at about 30-35% AUM to growth. So from there, you can still double and still come to average. So you can get an estimate of how much more room we have. Certainly from a larger base, mutual funds, and really this depends on which products deliver how, but the growth rate on a smaller base for alternatives is faster. It's also reflecting what investors are choosing. So as investors mature, maybe looking at more sophisticated strategies, taking on more risk, and looking at nuances in their portfolio is becoming the next phase of growth. And certainly both alternate managers as well as mutual funds or AMCs such as us, which also have an alternates platform, can be both growth engines for us.
Now, Gopal, because of the base effect and the fact that we're still in the nascency, the growth mark of alternatives can't be questioned. The question will literally come is that what mutual funds have done beautifully is democratize investments, single stock investments, which could have been large and not as safe, into something which is safe and available for the small ticket investor as well. Obviously, alternatives can't go down that far at 250 or 500 rupees. But as you look far, right, and there is a need to connect domestic savings more effectively to private markets. How can alternative managers do that while maintaining investor protection?
So that's a great question, and we see this happening in 3 steps. First is democratize institutional access. So there are many institutions today who cannot participate in alternatives, leave retail investors. What does that mean? When tomorrow EPFO, NPS, etc., start investing in alternatives, then in one stroke, crores of investors, underlying investors, get access to alternatives. The second step is regulated intermediation. So SEBI has just come up with the SIF category, which lowers the threshold from 1 crore to 10 lakh. And it has worked very well. And I think in 1 year, it has raised close to 18,000 crores. And the third step is accreditation. This is a beautiful step that has been initiated by SEBI, which is accreditation moves away from minimum ticket size of 1 crore to income and wealth as a criteria. And I think this will further broaden access for investors. And then, of course, there are listed products. There are REITs, InvITs, and down the road, there'll be listed managers. These also democratize and mainstream alternatives, furthering access for alternatives to those investors who either do not want to commit 10 to 15 years or who cannot invest, like vast sections of retail investors, who will neither qualify to be accredited nor meet the 1 crore minimum.
Okay. Now, Gopal, this question goes to you. Since Vishal runs a retail mutual fund pocket, I won't ask him to analyze his peers, but you can definitely look at the space which is available for investors right now to invest in as right now, right? What would determine which of the asset managers will come up trumps over the next 10 years? Is it ones which combine traditional investing and alternative investing the best? Is it the technological edge? Who determines that amongst the, who determines, or what will determine who's the first amongst equals, or 1, 2, 3 amongst equals?
So I'll take a step back, and my way of looking at this question is very different. I don't think it's just about technology. I don't think it's just about products. I think it is about performance and hygiene. I think managers that continue to deliver on performance consistently, whether it is public markets or private markets, will win. And similarly, investors that continue to deliver on trust and transparency will win. See, 10 years ago, the mutual fund industry started institutionalizing. And today is a major milestone. I think with SBI mutual funds listing, now 50% of the AUM is listed. So first we institutionalized savings, then the managers themselves got institutionalized. In private equity, this playbook in India is yet to play through. Institutionalization of managers is just about to begin. And in a few years, you will see greater institutionalization. And what does institutionalization bring? It brings transparency, it brings succession, it brings greater equity ownership within teams, greater alignment, so on and so forth, and inspires more investors to come forward. So my framework for this is performance and hygiene. Some managers already have it. Those who manage to keep it, those who manage to excel on these two parameters of performance and hygiene will continue to succeed or will overtake others. I think selection of products, public plus private, public alone, private alone, technology, these are all enablers.
And Vishal, to you, therefore, while we've determined that there are great growth opportunities for this space, what are the risks? Is it an attempt to grow too fast? Because Gopal made a pertinent point. It's not about just the other edges, but the fact that performance, which is a no-brainer. But what are the risks really to the growth of the space and the growth of a particular asset management firm vis-a-vis the others? What should people keep in mind when choosing where to invest within the alternative space or within the companies which are in this within this asset management space?
Let me take the second one first, which is the risk for a particular asset manager before we look at the space, because the risks are slightly different. For a single asset manager, clearly, like Gopal mentioned, that performance consistency is a key driver, trust is a key driver. So therefore, sustaining that, especially performance, becomes a key growth enabler. And I think as we all understand that everyone goes through cycles, fund managers go through cycles, and also in the urge of trying to beat a very competitive peer set, how much risk do you pile on and can you actually execute to that risk becomes itself one of the challenges to manage. So performance consistency and as an asset manager, how much risk are you adding becomes one of the things to watch out for. Now that risk could be in terms of how individual schemes are performing or distribution, technology, etc. So where have you invested? So those are things I would watch out for. Just using the anchor that performance consistency, trust, governance, and all the enablers that are required by the ecosystem is something that you've got to offer. Keep in mind, it is a very competitive space, and customer behavior evolves all the time. So you certainly can't sit on your laurels. So that would be, I would think, things to look out for in the individual asset manager. For the ecosystem, I would be sort of more bullish because I think the risk feed away a bit because the ecosystem, despite the individual performance cycles that asset managers go through, still has a lot of room to sort of allow some of these edges to actually be blunted, if I can call it that. There, I think it's really about the core trust and the behavior that savings or investors are showing. So the SIP growth story, the resilience that is seen in the investor of not getting scared at every dip. I think those are the more fundamental drivers. So I would call the core trust in the vehicle as the primary driver. Expectations of investors. In the past, as we all know, markets have delivered fabulous returns. Now we expect that to keep compounding despite the fact that nominal GDP or real GDP may come off a bit, given the fact that inflation has been more moderate. So getting your expectation retagged from maybe a high teens to a low teens or maybe just about double digit, those are, you're not getting disappointed because that will still probably be the best asset class, but not really getting disappointed in taking on too much risk by doing more exotic things. Those are things I would say which would impact the industry over the longer term.
Great. Gentlemen, both of you, thank you so much for taking the time out and being with us today and giving us this glimpse of what the AMC space could look like, and all the best with your respective businesses as well. I really appreciate your time. And in fact, a large asset manager is getting listed today. CS Sethi of SBI is speaking on the eve of SBIMF getting listed. Let's cut in.
Education, a young professional building long-term wealth, an entrepreneur securing retirement, or a senior citizen investing with confidence. Ultimately, our business is not only about managing assets, but more about managing aspirations and helping millions of Indians participate in the nation's growth story. Today's listing represents another defining chapter in our journey. I would like to express my heartfelt gratitude to investors across every category for the overwhelming confidence they have reposed in SBI Funds Management. The IPO witnessed, as mentioned by the MD and CEO, exceptional response, being subscribed nearly 42 times, with the QIB portion subscribed approximately 140 times. The issue attracted bids worth nearly 2.98 trillion. The participation of leading domestic and global institutional investors, retail investors, shareholders, and employees reflects confidence not only in SBI Funds Management, but also in India's long-term economic future. As the largest IPO...
Okay, all right. We'll bring you those rates as they settle, and of course, it's just minutes away. For now, let's turn to another corporate conversation. And Rallis India stands out among the list of companies that have done particularly well in the first quarter. We'll talk about whether or not this is replicable in the rest of the financial year. We'll be speaking with Mr. Gyanendra Shukla, who's the Managing Director and Chief Executive Officer of Rallis India. But before we come to you, Mr. Shukla, allow us to set the context. My colleague and research analyst Varsha is joining in to tell us about the key numbers that we should focus on. Varsha?
Well, overall the numbers did beat estimates, I would say. There was the aggressive product replacement led to the push in volumes. Strong campaign activities, led to domestic formulation growth. Overall, if you see the volume growth in crop protection business, aided profit for the company. Fixed cost optimization, improve operating leverage. Overall, if you see, there's a spike in EBITDA margin. The gross margin improved due to good product mix and price hike, but the EBITDA margin improvement is due to the manpower reversal that you are seeing the spike in the margin. June was driest in 12 years, delaying kharif sowing. Heat wave, crop shift impacted farm demand for the company. Lastly, on the domestic crop production, well, B2C revenue, if you see, surged 19%. Overall, yes, a good set of numbers, but yes, EBITDA margin improvement that you're seeing is, of course, on the back of reversal in manpower cost.
Right, Mr. Shukla is with us. Thank you so much, Varsha, for that. Mr. Shukla, just your thoughts on what led to this significant outperformance in the first quarter, and whether this is something that is replicable in the remainder of this financial year as well.
Good morning. So it's a very tough question to answer. All of us know that weather has not been very cooperative. There is delays in sowing, but not that everything is bad in the market. I think the things which are falling in place at this point of time, it looks like planting is delayed, but if rainfall recovers, farmer will plant something, and what kind of choices they will make, it will depend on the crop situation and moisture situation. As far as Rallis is concerned, we did have a good domestic season, both for seed relatively, less relatively for seed, more for crop care. And part of it has also happened, and that is some of it is reflected in profitability as well, is that when war started, we worked proactively on securing inventories. And as a result, sometimes you get advantage by getting early in the market and procure the inventory. The other thing we did well was when export became a big uncertainty because of the war, we prioritized a stock allocation to domestic markets, and that helps us. It's always when you're exporting catalog product to the export market, margins are lower. Uncertainty of things getting stuck in the high sea was very high, so we said, okay, prioritize domestic first. We're an Indian company based in India. We have to help Indian farmers first.
Okay, just a continuation to that, as you mentioned, see the B2C crop care business, a 19% growth, B2B segment, a 19% decline. And I think it is the export and the institutional side of it that you're talking about. Do you think this will be cyclical or structural in terms of the weakness that you're seeing? And when do you expect that recovery to come in?
So it's very, very difficult to say, because like India, global crop protection demand is also driven by their crop cycles, right? So, for example, North India, if you go to Northern America, most of the demand is over for the current year. Now we have to focus on Southern American markets. So, and then again, you come back in October, November, North American markets start. At this point of time, it's very, very difficult. Nobody has a crystal ball to say what will happen. What we control is really be very active in the marketplace, understand the dynamics, where farmer demand is there, keep a high tab on the inventory, where product is moving, where not is moving, run special campaigns, in the targeted area so that we can optimize sale. One thing is very important, that as planting is getting delayed, we have also seen hardening of the commodity prices. And as commodity prices harden, for farmers, those who have a already good standing crop, they will try to protect it with the intention to make more money at a later stage. So those farmers tend to use as well a crop protection product. And other thing is that we should not always equate low or delayed rainfall to businesses. Last year, there was a heavy rainfall. Rainfall, in fact, was too much, and that led to missing of a spray. So it's always a balance. I mean, I keep saying a spatial distribution of the rain and crop planting that will decide what will happen. Sometimes intermittent rain are better because then farmers get opportunity to go to the field and do the operations and use the product to maximize their yield and income.
I'm just wondering, Mr. Shukla, this 19% growth that you've delivered, how much of it was volume expansion compared with dealers' pre-positioning of inventory?
So it's a combination of volume and price both. Having said that, we are trying to really pass on all the cost increases to the customer, but a lot of it is volume driven. I think last couple of years we have been talking about introducing new product, getting more active in the herbicide category and all. So a lot of that is also a result of that new product introduction, being more focused and targeted in the marketplace, completing our portfolio wherever there were gaps. So this combination of things is just not one factor.
The other question I have for you is in terms of where the margins are concerned. Now, the recovery that has happened with regards to, or the reversal that has happened with regards to manpower costs, that is something which has aided margins this time around as well. So what is your expectation for FY27 as a whole, number one? And in terms of the product mix as well, how are you expecting that to pan out to aid margins?
So as far as product categories are concerned, for pre-emergence herbicide and post-emergence herbicide market, for Kharif is almost over, and we had a high double-digit growth. Now the time has come from non-selective herbicide as well as, as far as herbicide is concerned, we are preparing for the Rabi season. But insecticide and fungicides in this kind of environment, wherever crop is good, will be in high demand. Now, as far as margins are concerned, I think I would prioritize selling the volume because we have taken an inventory position. Our priority would be to be competitive in the marketplace. Do not worry about, be competitive and go and actively promote, work with the farmers.
So, Mr. Shukla, you're saying volume growth is what you're going to look at. Margins is not something which you're going to really focus on. So, is the number that you've achieved?
We will not focus on margin, but at the end of the day, you have to be competitive in the marketplace.
Okay. So is the current first quarter margin something that you will be able to sustain in FY27, or should investors actually watch out for something lower wherein your volume growth will be much higher?
So, I mean, we do not give any forward-looking forecast, but what I can tell you is that a lot will depend on how crop situation evolves, right? If crop situation is healthy, farmers show intention to protect their crop, obviously we'll be able to sell the product first. Idea is to sell the product, be competitive in the market. That's our objective. I think margins get protected anyway if you do right things in the marketplace.
Okay, so volumes, key priority, and then margins will follow. Thank you, Mr. Shukla, so much for joining in. Always a pleasure to speak to you as well. And I think that's what the street is probably worried about, Alex and Neeraj, because if you see the stock, optically the numbers are looking very strong, but the stock is nearly at the day's lowest levels. But moving on, shift focus to the listing of SBI Funds Management, which is set to debut in the bourses in a few minutes from now. We are joined by our colleague Nimit from the NSE headquarters. Nimit, what's the mood like there ahead of the listing?
Absolutely. Mr. C.S. Shetty, the chairman of SBI, just spoke, and he said that he's not talking about managing assets but managing aspirations, and he said this is really the start of the story and not the conclusion of something, and that really sums up the mood here. In a few minutes we're going to see the listing. 9,813 crores, 42x subscribed, and this is the biggest IPO of the year so far with the biggest fund manager in the country right now. Let's talk a little bit about those numbers before we see the listing in just a few minutes. 140% of the oversubscription came from QIBs. It's been driven lightly by them, the strong demand. Also, the non-institutional investors have oversubscribed by 22%. Again, huge demand from the retail space as well, which has seen high subscription rates. Apart from this, the IPO is going to be no fresh issue. It's going to be, like we've always reported, an offer for sale between SBI and Amundi. SBI will still remain the key shareholder and the majority shareholder in the company even after the partial exit here. A few numbers to put out there just to understand how important this IPO is. SBI's funds is India's largest mutual funds manager by QAAM, and it has done 12.51 lakh crore in average assets FY 2026. FBI funds holds a 15.3% share in the mutual fund industry at the end of the last financial. And the important factors that Mrs. Shetty also laid out just a few minutes ago for us is that it's going to increase its penetration in tier 2 and tier 3 cities, expand digital investing ecosystem, grow the SIP-led retail inflows, which have been driving SIP growth over the last few years and keeping the market strong, scale ETFs, passive funds, alternate investment products, and leverage SBI's banking network to deepen distribution. We're just going to see the bell ring in a few minutes now, and we'll keep you posted on that. But the largest IPO of the country is off to a good start, heavily subscribed, grey market premium between 15 and 18%. We're going to look at a strong listing here.
All of us are just waiting for the countdown to see what the listing looks like. But thank you, Nimit, for that. We'll come back to you as well. But MK has initiated a buy. They have a target price of 750, and they're saying it's a play on brand, distribution, and under penetration. And there are multiple levers to ensure healthy AUM, revenue, and profitability growth as well. You have Equirus as well, which has initiated along, and they have a target price of 675 on the counter. They're saying it's powered by reach and built to compound. There is a distribution moat, which is powered by the parent company, and they're seeing multiple optionality beyond mutual funds. They're expecting equity and passive assets to drive almost 16% of the CAGR growth as well. And there you see the rates. It has just listed in terms of where SBI Funds is concerned. You're talking about a 7.5% up move. 616.65 is what you're tracking in terms of SBI Funds that has listed on the bourses. Any comments, Alex, Neeraj?
And there's a little bit of room that was left for investors. It seems to be building at this stage, and this was expected to take place. This is, remember, India's largest mutual fund by assets under management, and just a few of their schemes that stand out, right? You have the SBI Equity Hybrid Fund, where they're managing over 80,000 crore of EUM. They have a large cap fund where they're investing, or rather they're managing as much as 55,000 crore rupees. Their contra fund is actually a leader. Not too many contra funds in the market. You either have a value fund or you have a contra fund, and they have one that is quite highly regarded, where they're managing quite a considerable amount of money, close to 50,000 crore rupees in that scheme as well. So a well-regarded mutual fund house listing, and now it kind of completes the pack. And I think the one that is missing is Kotak from that list. If you're talking about the top 5 or top 6, right? You have Nippon, you have SBI, you have HDFC AMC, ICICI Pru, and now SBI.
Yeah, of course, let this bell ceremony ring. But I was also going through, while Alex and Hiral were talking, of what some of these asset management firms have done in terms of returns.
Yeah.
From Feb 2023, Nippon Life India Asset Management Firm was at 200, it is at 1200. Yeah. That is, of course, the best performing one. But HDFC AMC also has doubled in the last 3 years. So if we can just pull up these 3-year charts or 5-year charts of these names, you will see that they've all created wealth. And therefore, no reason why SBIMF over the course of the next 3-5 years may not be able to do so. This is 5-year chart for HDFC AMC. Look at that from the bottom. Nearly double. Nippon is even better, like I said, from a 200 price in 2023 to 1184 currently. That has done well, and ICICI Pru hasn't done badly.
Limited point, right? Neeraj, we've been speaking about the flows through SIPs that have come through, and particularly for this institution, State Bank of India, SBI Mutual Fund, it's been a bit of a trend, particularly over the last 1 year, that the growth from below 30 cities, as they designate it, right? simply put, below the largest 30 cities, the growth of SIPs from those cities are actually more than the top 30 cities, which just indicates that the depth that they have of coverage and the network that they have is being utilized effectively, and they're deploying those assets.
Yeah. Great going. Okay, let's move on. Ashok Leyland has unveiled India's first air suspension truck range, marking another milestone in its commercial vehicle journey. My colleague Danish caught up with Sanjeev Kumar, President, MHCV, Ashok Leyland. Listen into what he had to say.
We have launched a new range of air suspension trucks. Could you tell us more about it, and how do you believe that these will be able to help you to expand your market share?
See, if you look at Ashok Leyland, we are known for innovation. And I'm happy to share that today we have launched India's first air suspension multi-axle vehicle. The advantage of this vehicle is it offers a 4-ton extra payload. And when you convert that 4-ton extra payload into economics, it is equal to almost 5 lakh worth of savings for customer. And let's say in 6 years, it's a huge advantage for customers. So we have launched today these trucks in 3 configuration. One on 12-tire vehicle, a 14-tire vehicle, and 14-tire with the dual-tire vehicles. So we believe that these vehicles are going to enhance the market, multi-axle market in India, and offer customers many options which they were looking for, and flexibility also. So these vehicles will do very well for the applications like tankers, cement, polymer, etc. And we feel that this is going to help us in improving our multi-axle market share in India.
Are you also targeting exports after the launch of this particular range, and what will be your target, and which will be those markets where you will be exporting these?
Right now, I would say that we are going to sell these products in India. We'll kind of ensure that these vehicles settle in India, and then probably we'll look at export markets. Right now, focus would be domestic Indian markets.
And so by till how long you're going to focus only on the domestic market for this?
See, generally a product takes at least 3 to 4 years in stabilizing. So of course, in these 3-4 years, we would like to create sufficient volumes of these products in Indian market, and then we'll take it forward.
So if we talk about the industry performance in Q1 FY27, the commercial market industry rose in high double digits. But if we look at it carefully, we are seeing that within the M&HCV segment, we are seeing that it is a mixed bag. While the goods carrier has increased by 20%, but the passenger carriers have declined. So what is the reason why the industry is seeing this?
If you look at, I agree with you. The trucks are growing very well, while bus, there we saw some decline in TIV, but to me it's not. It's a temporary blip. My expectation is we are doing very well as an industry. We are doing very well in ICV segment, which is mainly school buses and staff. However, there were few challenges on MDB buses where bodybuilders were not able to get the required approvals, which are now in place. I would say that next 2 quarters should be good for the buses also. So overall, yes, we are optimistic about the overall CV industry, and we expect industry to grow this year also, despite showing growth for last few years.
So the first quarter of FY27 was very strong for Ashok Leyland, while the domestic market growth was there, but we are seeing that the exports, they dropped down by almost 18 to 19%. Is this because of the Middle East war that we are seeing, or there are certain reasons which are beyond that?
I think we are doing very well in international markets also. However, as you rightly said, a plant in Middle East actually was shut, and of course we were not able to produce any vehicles over there. Slowly things will move. Demand is strong over there also.
So what sort of demand are you seeing in the Middle East market, and by when do you expect to see the momentum falling back to the earlier levels?
I think demand is there. It's only a question of when normalcy returns. So keeping finger crossed, I would say.
Over the past few weeks, we have seen that there have been several hikes in terms of petrol and diesel prices. So are you seeing some kind of an impact on the overall demand?
See, I think when you look at our customers, what they need is certainty of the rates rather than volatility of the rates. I think government has already increased the prices. So what I understand, they increased the prices based on certain crude prices, and then crude prices came down. Of course, in last few days it has gone up also. But overall, I think there is a stability in crude diesel prices now, which augurs well for the industry. I mean, basis my interaction with the customer, I
look right. Wow. Okay. All right. go across to Puneet now to find out what the outlook for the sector, for the automotive sector is looking like. In fact, we're going to kickstart the earnings season for the automotive pack, Puneet, with Bajaj Auto today. What's expected from the numbers?
Well, thank you for that, Alex. There are four key takeaways that we're actually seeing for the sector as a whole as well, and that's relevant to Bajaj Auto at this point of time too, because you've seen the domestic volume growth largely remaining robust despite what we've seen across key segments as well as the current volatility. That's point number one. The second point being that there has been steep margin pressure that we're expecting in this quarter. So almost all players will be reporting a degrowth in terms of margins compared to Q1 of FY26. You have to watch out for some commentary on recovery. That'll be point number two. EV players are giving more comfort at this point of time, both in terms of growth aspects as well as in terms of near-term demand. So TVS, Ather, M&M are some of the key top picks for all brokerages. And the fourth point being that the price hikes haven't been yet uniform across players, so they haven't all been passed on, because Mahindra has taken a 5% price hike while Maruti has just taken a 0.4%. So that will have a margin play too. But when you look at the numbers for the two-wheeler makers, specifically TVS as well as Bajaj, both come out with earnings today. You're expecting a 34 to 35% revenue growth on a decent base for Q1. That will also translate to profitability growth. But then for Hero as well as Eicher, you're seeing a lower profitability growth compared to the revenue aspect because of the margin progression. So watch out for that. For passenger vehicles specifically, you're seeing Mahindra as well as Maruti both showing almost a 23 to 35% growth in terms of revenues. They are the best placed in terms of margins at this point of time, because both for Tata as well as Hyundai, it's expected to be a weak quarter for margin progression. They're expecting a 32% fall in profits for Hyundai because there was a fire also in the month of June, so that impact as well. And for Ashok Leyland, there's been a 13% revenue growth. We just spoke to the management, of course, at the key event. And for Escorts, you're expecting a good revenue growth of almost 27%, led again by volumes. But there are three things that you have to watch out for from this quarter. Price hikes, as I mentioned, hasn't been universal, and the quantum too. CAFE 3 norms have now come in just in the last few weeks. So a lot of commentary, if any, which changes the product launch pipeline for automakers, will be something to watch. And finally, the volume growth recovery. From H2, you see the GST rate cut base effect come in. So is Q2 also coming through in that sense, will be something to watch.
Okay, so lots to watch out for. Thank you, Puneet, for that. Yash Agarwal, research analyst at Nirmal Bang Institutional Equities, joins in. Yash, welcome to the show, and this is Hiral on this side. You have two-wheeler companies, that's TVS Motors and Bajaj Auto, that will be reporting numbers today. But overall, I would say which segment that you would be watching out for in terms of the first quarter, and what's your expectation?
Thank you for having me, Hiral, and good morning. Basically, what we have seen in Q1 is, interestingly, the volume growth has been strong across the sectors, and strong double-digit growth across two-wheelers, three-wheelers, passenger vehicles, CV. But margins we are seeing with pressure mainly because of the inflated raw material cost and basically the calibrated price hikes that OEMs have taken across the categories that are not enough to compensate for the raw material inflation. And also because of the heightening of the crisis in the Middle East has resulted in higher freight costs, and the supply issues are also there. So few of the players like in PV and two-wheeler had a strong export performance. So basically their results could be positively impacted because of the strong product mix, while CV players struggle a bit in terms of the export. Overall, I think that most of the players will report a strong revenue, but margins we are seeing contraction across the categories, while players who are able to take higher price hikes are able to manage their margins through cost initiatives, would be able to perform better and may have less moderation in the margins, while I think players who have higher exposure to lower end may not be able to pass on the price, like the pricing power that the premium players have.
Okay.
So they may struggle a bit.
Okay, so that's a fair point. Yash, let me ask you this though. Are there exceptions to that rule? Because Bajaj Auto posts numbers today, and seemingly based on its overall volume mix, you have a significant chunk that is going towards exports, and that therefore contributes positively. The mix improves positively. So to that end, they're expected to shore up the margin. So apart from Bajaj Auto, are there any other exceptions that you're looking at?
Basically, apart from the Bajaj Auto, even TVS Motors, because of the higher share of export, would have a positive product mix. But players who have relatively higher exposure to entry-level segment like Hero Motors and all may struggle a bit in terms of margins. But overall, two-wheeler, I think, will relatively do better than the PV and the CV space, and they may be able to manage their margins better this quarter.
So Yash, if you have to look at giving out your top picks ahead of the auto sector reporting numbers, in terms of the first quarter, what would they be?
Basically, like I will prefer right now auto components over OEMs. Basically, although we remain constructive on the OEMs, when we expect healthy earning growth, we believe ancillaries have entering a structural purple patch where like they are not only the single product suppliers, they have diversified into precision engineering companies and the premiumization, EV transition and large export opportunities helping to drive the top line growth. So we prefer in OEM, we prefer players which have higher exposure to premium segment and who have relatively good mix in export versus players who are more concentrated in the domestic segment and at the lower end of the volume spectrum.
Okay, so it's the OEMs versus the components players. But thank you so much, Yash, for joining in. Always a pleasure to speak to you. We'll quickly slip into a short break. On the other side, we'll be in conversation with Nimesh Chandan of Bajaj Asset Management. Please stay tuned in terms of what this volatility should mean for investors.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leader.
Welcome back. You're watching India Market Open, and it is my pleasure to introduce you to Nimesh Chandan, the CIO of Bajaj Asset Management. Nimesh, very good morning, and thanks so much for joining us on this subsection of the India Market Open show, which is Talking Point, and it is my pleasure to speak with you as always. Let me ask you about what you've made of the initial trends that you're seeing this earnings season, particularly at a time when, just as we thought that the external front pressures would dissipate, they've once again seared upwards, right? So crude oil price back at close to $90 per barrel, but it seems like the print on the earnings is better than a lot of people had anticipated. What's your thought?
Hi, Alex. Always nice talking to you. If I were to summarize our view on so far the result season, I would say positive surprise. We were expecting, after all the geopolitical issues, the issues 2 months back, we were worried about oil supplies, gas supplies, inflation rising, super El Nino. Now, compared to all that, and now the result updates which have come in, or the quarterly updates that some of the companies have given at the beginning of the quarter, they look much better than expected, whether it is credit growth, whether it is consumption growth. So actually, we are positively surprised. Certain sectors were expected to be under pressure, like, for example, IT, where we were expecting slower growth. And that has impacted their valuations also. So that has gone as per expectation. So net, while we don't see a very sharp increase in earnings for the Nifty so far, but with the results that have come, the trends are definitely positive.
Nimesh, good morning. Hiralia, the trends are positive. Now, if you have to correlate that to what's happening in the markets, down what, less than 10% at least from the last highs as well in terms of Nifty 50. But what is concerning is that we've always remained range bound in the recent past right now, and that's what investors are concerned about. In that kind of a scenario, are you seeing any green shoots where investors should start looking at in terms of sectors then?
That's a very interesting question. Internally with the team, we've been debating whether we should give a market outlook only based on Nifty, or should we actually give a separate outlook for mid caps and small caps. Look what has happened in the market. Small caps have had a fantastic rally since March. And the index is up more than 25%. Similarly, mid cap index is at a new high. I think small cap also intraday it went to a new high. So it's the Nifty which is under pressure. Nifty is seeing some of the sectors, some of the companies having some specific issues because of which the overall earnings growth is looking a little muted, and it is also affecting the valuations. So while Nifty, we are still bullish, we still think that the intrinsic value of Nifty is around 27,000, which means we are hoping for a new high soon. But the momentum in earnings and in stock prices of mid caps and small caps is fantastic. Even in terms of sectors, we see green shoots, or we see positive commentaries from most of the sectors. IT is the only sector where we see some kind of pressure. In banking also, though the stocks have reacted very sharply, but if you see, the numbers are not that bad. And many of the large companies are seeing a turnaround in their credit growth numbers, in their NIMs. So that will continue for the year. So, and valuations are very attractive. It takes a little bit of patience. So I don't know which one will move first, but there is a good amount of companies to select from. If you're looking at the broader market, say in BSE 500, there you can create a fantastic portfolio today which has quality, growth, and value.
The fact that you're relatively new in the asset management space, you've managed to accumulate quite a bit of a corpus nonetheless. But having said that, you're more nimble than some of your peers. You're able to take slightly larger positions at the broader end of the spectrum. And I know that you have this overarching framework of mega trends. So are you fishing in deeper waters, so to speak, to find those opportunities of significant growth? And to the point where the Nifty 50 has underperformed, it's underperformed because the large caps are not showing that kind of growth in earnings, right?
So there's a very interesting piece I had written some time back about mega trends, that somehow markets have become a little impatient, or they are disturbed by the short-term noises so much that they are putting a lot of time in predicting the direction of the next tick. Whereas ideally, you should be focused on the direction of the businesses. And frankly, from January 2025, since we've seen rate cuts in India, we've seen income tax rate cut, we've seen GST cut, we've seen the effect of wealth effect because of gold, things have slowly but surely improved. And we actually try using these mega trends to create a portfolio of winners over a longer term. And in the short term, because of the noise, we are actually getting the burger we like at the price we want. So it is frankly a fantastic time to go fishing.
Okay, so it's a fantastic time to go fishing. Having said that, why don't you, for the people that don't understand or have not heard yet your description of some of the mega trends that are at play and the opportunities that they present, Could you briefly take us through your top 3 trends right now?
Alex, I'm passionate about this topic, so I'll try to concise it with the time we have.
We don't have too much time.
So AI is a mega trend we identified very early, but because of the constraints that we have, that we are investing in India with a certain set of companies, we actually picked up all the AI adjacent plays, which is mainly say in the power sector or the EMS, electronic manufacturing services. These are fast growing segments. There is a sudden need for more power. There is sudden need for more gadgets, and people are upgrading there. So we actually picked up these trends very early, and we were able to capitalize on those. The valuations have also moved up, as well as the profits of these companies. The second area was financialization of savings, and that is a continued trend for the past few years, where we benefited from certain NBFCs, financial institutions, which are using AI and UPI payments to reduce their costs. And capital marketplace, the entire capital market infrastructure, whether it is exchanges, RTAs, brokers, so those benefited, wealth managers, so those benefited us immensely. And consumption discretionary. Here, it's been a kind of a volatile ride. This sector has not been in favor for the last 2 years, but which is why getting the right valuation is, I mean, at this point of time, we have many choices there. So we have companies that are everything from a quick commerce to real estate, where companies are doing well, profits are growing, ROEs are good, profits are growing faster, and we are getting good valuations for them. So we have picked up consumer discretionary big. Pharma, this has been a fantastic story in the last 3 years. If you see, this has been quietly outperforming the market, especially the segment of CDMO or CRAMS, that is custom drug development or contract manufacturing. This has done extremely well. Companies have increased in terms of order books. They have launched new molecules and are getting good prices for that. Rupee depreciation has helped actually create a new manufacturing renaissance. So many export-oriented companies, and I was listening to some of the experts who had come on your channel earlier about, say, the auto ancillaries, and one of them mentioned that they are entering a purple patch where they are actually, the exporters there are actually getting good domestic demand plus export demand and getting benefit of the rupee. So there is a lot to play for. One of the mega trends we've added recently is a commodity super cycle. Because of spending on defense, because of people moving from just in time to just in case kind of having higher inventories, we are seeing benefits to the commodity sector also. And every technology change is seeing our commodity guzzling. So that's another trend that we have recently added, and we are very, very bullish on. So these are a glimpse of all the things that we are bullish about.
You know, one point I want to pick up from what you're saying right now is in terms of pharma. I was just reading an article where someone's talking about the patent cliff that is going to be coming as well in the pharma space. And when a patent cliff comes, usually it's your generic companies that stand to benefit. And obviously it is the Indian companies to some extent. Are you anticipating a gain on the back of the patent cliff as well, which was looked at between 2025 to 2030? Because a whole host of innovators' patents that will be expiring between these 5 years.
Again, an interesting question. See, it is very tempting to generalize on pharma based on the domestic growth rate, on the patent cliff in the generic side, on the regulatory changes in biosecure and the CDMO side. It's very tempting to take all that in, but that just gives you an overall underlying bullishness about the companies. The product portfolios, the research facilities, the clearance of plants, the kind of therapeutic that companies are attacking or launching new products in are varied across this whole segment. So yes, there is a buoyancy in the entire sector. From here on, however, choosing the winner will require a thorough understanding of the many aspects that I spoke about of a company and the valuation, whether it has been already captured or no. So overall, we still believe pharmaceuticals and healthcare is a beautiful sector to be in, and it is not impacted by these short-term issues on the war or on any geopolitical issue. However, the winners from here, if you want to create superior returns from here, it will be a more bottom-up approach that you need to take. And it is difficult to do that in pharma. It requires a lot of in-depth research, but that's where the wealth is.
Nimesh, always a pleasure speaking with you. Thanks so much for taking the time, and we enjoy when you get passionate about subjects, because we get to hear some very good answers. Thanks so much for taking the time as always.
Thank you so much, Alex. Always.
All right, now after a pause of 13 years, one of the most prestigious honors in Indian business is back. On the 26th of July, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have not just built successful businesses, but helped shape India's economic journey. This award recognizes excellence that stands the test of scrutiny. Months of research, analysis and evaluation have gone into identifying the nominees across sectors. And you can find who wins, of course, live. We'll be live through the day on Sunday. And the who's who of the markets as well as business, and also the finance minister is going to be there.
Absolutely.
Hira is going to be there, so it's going to be fun.
Alex is going to be there, and
I'm going to be hosting.
The net worth that is going to be under the same roof is going to be very interesting.
Yeah, I mean, how many thousands?
I have not calculated that. I think that's going to be the trivia.
Lakhs of thousands of crores. We'll have to look at that. But
this is going to be very interesting, because you're talking about, you know, a celebration of leadership, and just to be noted, this is a heavy-duty exercise that has gone through to get you the winners, and this is not a marketing exercise. This is not an advertising exercise. It's an absolute exercise where we have done the homework. The jury has been very strong. PwC has been a partner, and the names that have come in is, I mean, you're going to actually be celebrating a great company, a leader who has made great calls as well during the course of his or her journey.
Yeah, absolutely, absolutely. So we have all of that lined up for you this weekend. Make sure you keep your plans aligned with that, and we'll be live through the day. We'll get you those updates. In the meanwhile, it brings us to the end of this particular edition of India Market Open from the NDTV Profit Suzlon studio. From Hiral, myself, Neeraj and the team